Should we call this a downtrend? How do we describe the chart in gold right now?
Yeah, I mean, the chart for gold does look for me more like a downtrend, and there potentially is further weakness potentially to come from here. But I think you've nailed it there, right? The market is not breaking down, considering the dollar is at multi-month highs in here against many currencies, particularly against the euro. You're just not really seeing a significant breakdown in gold that you would expect with that kind of dollar strength. So I think that's really important to note that on a relative basis, gold is actually doing pretty well in here. Potentially a little bit more further downside to come, but I think if you do see the dollar top out, then we're probably going to see a base build in gold. And then if we get down towards the low 1960 kind of area, down towards like the low 1900 kind of area, I think it's a real kind of buy zone down there.
Okay. Love the details and the specific levels, always helpful. Steve, good stuff. Like the charts. Appreciate it.
No problem.
Yeah, nice work. Founder and primary analyst at The Market Chartist. Putting the chart in the name for sure. All right, some good technical levels to think about. And test for the S&P 500 here, as well as the NASDAQ, which has held on to that uptrend that Steve points out, an important point, even with some of the softness and big tech leaders. We'll be watching Apple at the opening bell, see if it can get a little love from some of the street expectations we heard from Dan Ives. Watching bonds to see if they create a problem for stocks. Right now, they're not. It's been a lot of back and forth this morning. Dollar slips back red, though, and equities take their cue to bounce.
You know that tech stock we talked about? I picked up 500.
Good morning, September 13th. We're going to be streaming stocks, options, futures today. You guys had a good morning, good evening. Market just opened a few minutes ago. Sub up, like up, comment down. Happy money sticks around. We'll be trading the SPY, GME, barbecue, AMC, whatever comes our way. Watching the SPY here this morning. Did have CPI numbers come out this morning. And look at them as very muted though, the response, very flat. So maybe it hit expectations. I'm not sure. I haven't looked at it yet. Or maybe it's a little hot because we are rallying now out of open. Thanks for joining, guys. Hope you had a good morning. Sorry about yesterday's stream. I don't think it was because I was playing the Apple event, but yeah, I don't think I've ever had that happen without audio. So I didn't realize it for a long time either. And then I don't know how I realized it, but at any rate, kind of bad timing with the barbecue court hearing right then. So we're still on Twitch though. If you guys ever can't find me on YouTube, I'm on Twitch. Twitch.tv/ man. Happy Monies. Happy Monies plural. So here we are. Little pump on everything this morning. SLE is up 21%. Eyes up 0.21%. Got Funko and Overstock both up around 3%. A little right shoulder here on this Head and Shoulders forming on Les Spy. So I'm still seeing quotes for barbecue. Also heard it's back. It's on the expert market now, so I don't know. Did hit 15 cents this morning though. Oh. Let's see. Hit 15 cents. Yeah. Well, it's not looking good as far as TAs go. But it probably doesn't matter a whole lot anymore. Let's see, GME is up 1%. AMC is flat. Blackberry's up 1.3. Barbecue down 12.5, 1660. Super League, I think it's top on my watch list. Good morning to you guys. Good morning, Ben. Bonjour. Bonjour, Kintwai. Bonjour, Benjamin. Morning, Cassidy. Morning, Tasty. Morning, Bruce or Busy Bee. Good morning to you. There was a court hearing, a pretty big one yesterday. Just more talks of liquidation for shareholders. So yeah, this company, I don't think you're going to have any value. If there is a possibility, it's maybe with another entity that carries along the shareholders so that they can have the NOLs. I think that's maybe the only option for having value. Hello, Sergeant. No, I do not have a boat with barbecue money. I didn't short it. Spy holding up above VWAP here. Full flagging. Matter everyone's still buy it now, we're experts. You can't buy anymore? I haven't tried. See if I can buy it. We will still showing the price though. I thought maybe we wouldn't even see it like quotes. I think I can still buy it. Yeah, no, I can't buy it on TD. You're locked in. Can you sell it? I heard some people saying they can't even sell it. It's Wednesday. CPI was this morning. We also had yeah, that's pretty much it. Tomorrow, initial jobless claims, PPI, retail sales. That's all pre-market. So more catalyst for tomorrow. Be good for the longs on AMC if it starts to hold support around here, or at least make a higher low, higher than that $7. Got Mullen. Tony Mullen chart looked pretty good actually. GNS still consolidating in that area. He's fickle though when it wakes up. Gotta be ready. Overstock up 4.5. Looking for a position on this. To see if it's going to break this support. Looks like it might not. Buy coming down there a bit. Thanks guys for joining. Thanks for support this morning. Kind of a late start. Didn't get that pre-market hype going, but we do have 5 of you that thumbs up the stream, and I appreciate that. Try and keep the stream going all day today. No more Apple. QQ's at 17 cents. I guess, I mean, can you guys sell it? Any of you try to sell a share? Building up the swinging cash poison. GME up 1.3. Buy back up to VWAP. Maybe looking into getting some calls here. Little bull flag is being built. Had a headache for like 2 days. Kind of slight. Wonder if I'm actually getting sick now though. Sometimes it starts with a headache. Curious if we'll see barbecue traded a whole lot less now. I'm assuming. Yeah, I've traded IPO, Sergeant. 17 cents, 1.7, 17 or 170. It's still trading actually. Transactions doesn't look a whole lot different yet. You buy at 10 cents, maybe 4 cents. Usually the first day, unless you have a plan to just day trade it, usually the first day you're not going to get the best deal on an IPO. Some perform really well and rip up. This one has so much hype that I'm assuming it's going to the banks are going to pump it quite a bit before it's even released. The price you're paying is already up, could be 100, 200, 300% from its actual IPO price. So if you can time the IPO day perfectly at the bottom, and then you also get, I got some calls there, and then you also get a run up after, which is pretty unusual, then it can be good. Otherwise, I think the best is just to day trade on IPO day. And if you want to swing it or hold it long term, I would wait at least a few days. Yeah, it shakes out. I don't know the lockup period or anything like that on that IPO. That's another thing to look at. Some companies let the insiders sell on day one, which definitely affects the IPO. Assuming it's not a direct listing. But yeah, lockup period, and then how much the banks pump it. So you want to look at the IPO price and look at the price it starts trading at, because oftentimes hyped IPO, it'll open up 150% or something. So yeah, it's not a bad headache, fortunately. 10 cents is cheap. Trading 212 is stuck on 19. Seeing 1660 on Wibble. Let me see what E-Trade. E-Trade says, yeah, E-Trade's 6168, so pretty close. Pretty close here. Webble. Showing 15 cents on barbecue, down 21 now. I dance around VWAP. Down below VWAP. Moving average here holds. Aloha Maui. GME up 1.2. Those wicks on the 5 minute, that's crazy. On SPY. AMC down 1.3. Jeff Brands is up. Mullen 4%. Maui, yeah, I think because it went dark or went to expert mode or whatever. I can't buy it either. On expert. So is what Lord's been talking about. Maybe you can still sell it though. I'm not sure. I don't have any to sell, so I don't know. I can try. Barbecue's a new GameStop? Oh, slow. It's been slow for a while. Finger? Down 1.2. Oh, it did break out yesterday. I didn't realize. Yeah, that's not a bad pickup. Buying high, selling higher. Do it. Yeah. Take something today. Not feeling it. Yeah, you've got a little room to upside on finger. I can down some more there. Love my entry on those calls. Beautiful. You can buy it on IBKR? Oh, you're not selling because you don't want to, or can you not sell it? AMC, I mean, if it just starts holding some support, it'll look good. Nice bounce there on it, actually, this morning. Right back red to green. Back up to VWAP. Yesterday was starting to look promising. Actually 2 days ago. Yesterday too though. Fly back up to VWAP. Considering dropping these calls. Up 1.5. There's SPY above VWAP. A workhorse up 12.5%. LE. Looks like barbecue's liking that 15-cent support so far. See how long that sticks. GME still in its downtrend. Bit of chop here. To see if it still think it's coming down more. AMC is at least flattening, so probably starting to reverse based on that, as well as that volume and this RSI divergence. Here we go, SPY, there it is. My entry was dumb. and get a better exit. Cosmo Kramer up 5.5. This one looks nice. Ooh, where's my VFS? Down 2% on VFS. Here you go, SPY. AMC up 1.5 now. GME up 1.5. Bolty in the chat. Yeah, actually, I did listen to the PP show last night. I'm not. Bolty doesn't make me bullish on barbecue at all. So it's irrelevant to me. Since he's said himself that he doesn't hold shares and isn't involved. Which I take him at his word. A lot of liquidity being built here this morning with SPY. I'm giving the day traders early morning gift. Make them wait. GNS coming down, it's down 5%. Buy back to VWAP. If GNS holds that dollar level again. Barbecue at 16 cents. That's crazy. That was like a warning I got yesterday. It wasn't just like they took the stream down. Serious. The VWAP chop to close my calls. Dish is down 1.7. Still holding that $6 level. Buy coming down a little more. Out of those calls. Should have dumped him up here. I thought we were gonna keep rallying. Oh well. I like this chop. I had the Apple event, but yeah, I didn't. There's no audio, so I'm wondering if they can grab just from screen capture. Now, that or is that very small sound clip in the intro? It was like definitely less than 10 seconds, like 4 seconds, 3 seconds. I don't know when the stream cut off, so it's hard to know. I mean, even it could have taken some time, but I don't think it was poker, no. We've done that before. Go up later today? Yeah, might. You can sell Tasty? You can sell barbecue? Stress-free investment, exactly. Yeah, now you guys don't have to think about it, especially if you can't sell. That's why we don't have to look at it. Can't buy it or sell it. No reason to even look at it. You're just waiting for, I don't know, waiting for Ryan Cohn to come down on the wings of an eagle. I can fly higher than an eagle. It's kind of like that. 4.25 on Overstock. Still no Ryan Cohn buying, huh? Maybe he's trying to get a better deal this time. No, his last purchase was at 20 bucks. But I think that might have just been him trying to fulfill his tweet prophecy. I feel like he that might be part of it. I don't have as much respect for him after that tweet, and then nothing. I didn't hear anything from Matt for long. I lost some of my respect. You can sell barbecue, Sam? What brokerage are you on? Went down right when the Apple event started. So maybe it was from that tiny bit of intro music. I don't know. I've played Apple event, I think, without any audio. Maybe I don't know. Maybe they're more strict now. YouTube sucks. Owned by Google. You can still sell in all brokerages. Nice. Can't buy either. Share price went up and down. People that are able to, institutions, funds, market makers. It was always a fake market, anyways, Maui. Just algos trading it back and forth. However, actually on OTC, I don't think it's quite as much that way as it is on regular exchanges. But that's why you're seeing, I mean, that's why I've just been selling. Today also, people are only able to sell. I mean, there's still others that can buy, but I'm assuming most individuals can't buy it. Unless they have, you know, certain clearances. I come down a little more here. That's down 2.2. I just put a stop on these shares, so I don't have to look at it. Liquor. AI is down 2.3. Nirvana's down 4. Lodox down 1.9. Dish has been so pinned. Where's down 0.5%? What was the CPI numbers? I haven't checked. Yeah, his expectations. New low there. Yon's down 4.5. Gets a bounce. Bounce on that 980 area. He's up 2.25. Sold ACB for a loss. Whoa. Damn. They have offer shares or something? You know, most of these cannabis stocks are going to have to do that. Just hope they time the top. It'll just be a taking profits. Cycle. Let's see if it finds a higher support. This is what kind of I was waiting for to trade these. eToro still didn't open on OTC? What do you mean? What do you mean still didn't open? You can't open a position on eToro? Well, I don't think really anybody right now can buy on BBBYQ because it moved to the expert market. But eToro you haven't been able to since it's been on OTC, maybe. I think you can still sell though. Flashy spy. There's pre-market low. Might grab some calls there. Yeah, I'm gonna grab a few calls there. Little bounce play. Look how high VWAP is, wow. Much better entry to calls than I had before. BBBYQ down 13%, 1650. GME kind of flushed down with that SPY move. AMC up 2.3. Not bad volume this morning. Less than yesterday. Oh, you actually bought on Fidelity. I repeat, I just bought on Fidelity. Crazy. I mean, yeah, if you want a bigger position, it's gotten pretty cheap, 16 cents. That ain't bad. Looking TA wise, like, it's not good. Looks like it's still coming down. Broke this support. Now it's hanging out below it. That's bearish. I'd probably wait till 13.69, kind of this level. Or maybe in lower, like this, 10 cents. Of course, there's the 7 cents in there. Come up a little bit, give a little bounce play. Can't buy on IBKR. Do you want to buy more? Put a stop for break even on these contracts. Not trying to have a second losing trade. We don't get this bounce. A bigger bounce at least. Oh, nice little support on the market low. Been shown. A 50-day is resistance. 9 VWAP. This level here, 446.32. We break up above VWAP. You could then see kind of this inverse head and shoulders that's built. Build another shoulder up here. Guts. That would be sad. So you can still sell and make money. That's amazing. I'm gonna squeeze if they won't let us buy. I mean, it's not gonna squeeze from you guys buying. That would indicate that the markets are trading in a manner where supply and demand dictates the price. The squeeze would occur if Ryan Cohen or someone brings along the shareholders from BBYQ, which will probably be delisted or whatever at some point, and put onto a new ticker, or you'd get a new ticker or shares of a new company. That's what I'm assuming. I mean, maybe it'd still be with this ticker, but it's not just going to be from you guys buying. But yeah, as far as a squeeze, like, I don't know. Sure, there's a short position on it, rightly so. But to me, I wasn't in it for the squeeze, really. It was like, I was in it because it was undervalued. If it doesn't go bankrupt, if it doesn't get liquidated. But it got liquidated, so there's no more value. And without a squeeze, just literally the fair value of it, if it didn't get liquidated, would have been an easy 10x, 20x from where it's been since it's been on OTC, so you don't even need a squeeze. But yeah, of course that would also initiate some form of squeeze and momentum in there. Go back up to VWAP. Selling 30, oh, what is that? Yeah, like 30% there. I'll get back in if we break above here. Take the risk off though. No, get the VWAP chop again. Selling more. 30% left now. Which I'm gonna sell. Well. And my failed trade into now a green one. Now we see. Now we have a range. We can consider getting back into puts. There's just a little liquidity pump. You like puts here actually. Protecting VWAP. Time. $3.2% on AMC. That ain't bad. $11.80. So it would have been 78 cents prior. That split. DRS? What, DRS, your barbecue shares, Maui? You don't want to buy liquor? Congrats, you're all about the ugly dip buys. Sometimes ugly just gets uglier. Jeez, it does look ugly. But you're right. You have an inverse shoulder, inverse head. This is the head. We don't know yet. And you have all this liquidity over here from their shoulder. I would be very careful with this one. Market cap is only 8 million now, but that's still probably high. They're losing 322K a quarter. Revenue's only 150,000 last quarter. Yeah, this was only for the RC hype, which didn't get any of it. But maybe if barbecue gets canceled, then people will start buying something else like liquor. SPY. Calls might still be the play. Yeah, I like calls. Back in it. Breaking VWAP. Liquor, Blockbuster, Sears, Party, Barbecue, Overstock and Teddy. And for one. I'm starting to like Overstock's chart.
back here to when we were trading around 72. You can see the areas of consolidation on the way up into the $90 level. Keep in mind, back around 72, that was the end of May, beginning of June, and then you can see since, well, basically all summer, we've been, for the most part, consolidating around 86. Don mentioned the significance of the $90 level. You can see that up there, right? We have run into some resistance there, and albeit some lower highs at this point, but still no indication that this bull pattern here has been invalidated as long as we remain above 79. And in fact, take a look at the key tests of these key areas here, these lows that came into play. It held above that key area. I want to show you one more time frame as we add a little bit of a longer duration. Don's talking about this being a longer term trade here. Take a look at this here. Let me show you what's going on because you have a well-defined double bottom in the bottom left corner of the screen. We're going back to, we're talking about the summer of 2022, this time last year. And then again, these areas of consolidation that continue to form at the higher and higher levels. Currently balancing around 86. As long as we remain above 76, I think the bullish narrative here that we're forming value at higher and higher levels remains intact and a very valid one at this point, Nicole.
Yeah, I mean, and it looks so choppy. You know, when you look at what's going on around that 86 level. Thank you for all of that, Ben. Thank you. Don?
Yeah, no, ironically, I see much of the same inside of the chart. And I'll tell you what, a pullback even to the 76 level has pretty much got us where we want to be. It's one of the reasons I'm using the spread, stay intact, actually mitigate some of that volatility exposure in the near term. But again, I also reiterate, you know, those rates higher for longer, which eventually is going to have some negative implications to this group.
Understood. All right, let's get to the next one. We are looking at Walmart, new 52-week high. What say you?
Oh, this one I'm going to enjoy because Ben is not going to like this at all. So this is, you know, the quintessential kind of contrarian kind of coming out in me. And I'm taking a short position inside of Walmart. This latest run from this 155 to 165 looks unstoppable. But at the exact same time, it is way overdone to the upside at this point. So yes, I'm screaming overbought. Yes, I'm going to be the first one through the wall to want to step into a short position on this. Enough said on the technical front, because quite frankly, I don't think that the chart is going to support, you know, my trade in the least bit, other than the fact to say it's completely overbought. Look, Walmart, I'm going out to the November 17th expiration. I'm going to be buying a 160 put, selling a 150 put. So this is an out of the money put spread. It's done for about $1.50 debit. It is a big time shot for looking for a significant move down on Walmart in the coming months.
All right, he's had enough of Walmart, Ben. That's it. Trading to the downside here. That's what he's betting on. Your thoughts, Ben Lichtenstein?
Yeah, Don was talking about some of the recent strength that we've seen. Again, this stock has been impressive to say the least, and I think it's had many. It's been pressed beyond expectations for many in terms of the bullish narrative here, and I went right into the more intermediate time frame here. You can see a very well-defined trend to the upside, and you can see a breakout here. Let's begin with the areas of consolidation that have formed at higher and higher levels. So you've got value moving higher and higher since the beginning of May. Talking about three big areas that I was drawn to, this 150, 156, and currently the 160 area that we're breaking out of. Remember, we were just talking about ITB in terms of that 5-minute time frame. I talked about the high conviction breakout to the downside and the rejection of as we were rallying off that and V-bottoming. Well, a completely different scenario. This is exactly what the bulls are looking for in terms of this most recent move up here. You can see the high conviction breakout as we take out the highs from last month here, and then it does appear as if we're a little bit more accepting of this upper level, this most recent high print again up to 165, at least relative to what we were just talking about in terms of ITB on that
lured into
more
the SPY
granular time frame. Let's step away from this 4-hour candle chart. I want to show you what's going on here with the longer term here. This is a weekly chart, which really speaks to the strength here and how this has done well for the bulls, longer term bulls. We're going all the way back to, look at this, 2017 here.
GME, AMC, HKD all had that crazy pop. I don't know what that was up.
Stock was trading around
Weird.
$70 in the very well-defined
AMC's still up, or GME's still up
where the market, you can see, is slow to kind of regain composure. currently breaking out
Caught
of
this SPY
balance. It
rally.
formed around this
All calls there.
$138
Sold them.
level. So
Rebought them.
very bullish pattern here.
Just
to
sold
say
them
the
out.
least. One more look here at
sold the
Walmart
last one just a
relative
few
to
minutes
50
ago.
to 200-day moving average. Look at this. Again, just really speaks to the strength here. If higher today, it looks like 6 in a row to the upside, down only
AMC's
2
up
after we bounced off
4.8.
that 50-day moving average. Don, again, spoke to some of that strength we've seen on the short term, but it's not just on the short term here. Nicole,
Good shark guys will get you.
Rewarding the longer-term bulls for a while now.
Thanks, Ryan. Yeah, I looked at it when you mentioned it.
Rewarding the
HKD.
longer-term bulls.
Crazy
I
pumping
don't
up on that
know.
thing.
I gotta tell you, John, so many
11:30,
of the
gotta
guests
stop
who come
trading.
on the show
Oh,
say
chop
they
hours.
like Walmart. They pick Walmart. You're just
Look at
waiting
that
for
thing.
a little blip. Is that what's happening?
Weird. It really did turn on right with
This one will have to
GME
be
and
more than a
AMC.
blip. You know, one of the things that I love about
interesting.
This is what makes a market. You know, long side, short side. I am on the short side of this, but I'm going to tell you from a strategy perspective. So I'm in a $10 wide spread that I'm only paying $1.50 for. Look, I don't have to pay out half the time. I only have to pay out, you know, at most 1 in 4 times to make this profitable over the longevity in terms of a strategy. And that's exactly the kind of trade I'm looking for. It's a lower probability shot with a much larger payout. And that type of strategy can stand in the front of a freight train, which is exactly what Walmart happens to be. All I'm trying to do is actually time when that freight train is going to stop. I may get run over a little bit in the near term, but hey, that's why we went out to the Nov 17 expiration.
Okay, and last but not least, and by the way, I heard that over 20% of people already started their holiday shopping in August. So I better get on it. I usually shop on the 24th of December. I better get on it. VIX, let's look at the VIX here. Right now, today, the VIX is at 1354. So one of my favorite trades of all time was a couple of years ago where it was like it would go down to 12 or 13 and then go up to 17 and then go down. It was the best, easiest trade on Wall Street. What are you thinking now?
So I'm taking a long position in VIX. So for those of you that understand volatility index, you know, the volatility index, it's again, a bullish
11:30.
position, and the VIX is obviously a bit of a bearish position inside of the S&Ps. Nevertheless, okay, just on seasonality alone, we're coming into
I want the
obviously
short
halfway
again.
into September already, October. Those are typically extraordinarily volatile months. September being the most volatile month, historically speaking, in terms of seasonality. So I'm going to take that shot, you know, predicated on seasonality alone. On the other side of it, though, it's important to understand the VIX. It's not the product that it used to be. And it's one critical aspect is that most trade inside of the SPX, and that's what the VIX is based on, has moved to the shortest duration possible. And that has to do with 0-day expiration. So VIX is kind of much more lagging than it used to be. Nevertheless, if we get a good bump to the downside in the S&Ps, the VIX should actually erupt to the upside. In light of that, I'm actually going out to the November 15th expiration in VIX. I'm going to be buying the 16 call, selling the 21 call, putting myself in a $5 wide spread for a $1.06 debit. The VIX spreads are very, very nicely priced, very efficiently priced, because there's a significant amount of implied volatility skew in VIX at present time. Again, I think it's a nice shot for the next couple of weeks, looking for volatility to
It's good for us,
to this
okay?
marketplace.
Yeah, well, if you have
I
a
could drop,
bearish
didn't move
market or
barbecue,
some
though.
sort of sell-off, that'll go right into your wheelhouse. Ben?
Well, I kind of feel like that fits
AMC.
right into his Walmart trade in some ways, right? I guess.
I think it's
in terms
set up
of,
for a nice
taking a look
bounce trade here.
What I'm seeing is still weakness in the VIX. And by the way, I checked, Nicole, it's 103 days that you have left until Christmas. So get started here. Taking a look at the VIX, though, again, you can see some of the weakness. And just over the last few weeks, these areas of consolidation have formed at lower and lower levels. 1650 currently consolidating around 14 and working our way below the middle of that range and inching down towards the lows that we saw just about a week ago. Again, back in September, August here. Taking a look here at another longer-term time frame, just to kind of speak to some of the weakness here. Again, over in this instance, we're talking about 4-hour candle charts, and we're going back to the middle of March. When we were up around 30, if you remember, we saw a nice spike up to 30.31 here, but it was short-lived. You can see as we came off with conviction and then started to consolidate around 18.
Dish is
Got a
green.
high conviction move to the downside. You break out with
That's
lower
is
lows
also
and lower
green.
highs. These red candles are high energy to the downside as the market showed signs
Down
of strength here. And
3.6.
then look, as we've been
Looks like it's
call it a
reaching for new high.
levitation act, I've been again surprised as well, Don. I'm shocked that we can hang out at these upper levels here in terms of the broader market with the yields and what we're seeing in terms of crude oil, but we have been. And so again, the trend is your friend. Continuation more likely than change. I don't see the bullish narrative here. But again, I guess if you're looking to see some downside momentum in Walmart, then you're looking for some upside momentum in the VIX.
All right. Thank you both so very much. Great to see you for the big three. Wow. You count fast, Ben. 103 days. Okay. Gotcha. Thank you both. Don Kaufman, Ben Lichtenstein for the big three.
Lichtenstein.
Coming up, we're going to spotlight Apple. So the stock is down today. It had the big product launch yesterday, right? The Wonderlust event, and want to hear more about that. And what does the future hold for this company? That and much more when we come right back.
You close right there. If the market has much reaction. Excuse me, sorry.
The EV markets, really outlining and unveiling several different vehicles that are just pure EV plays here. So very interesting note, to say the least here. Once again, we are seeing the stock up around 3%. I think this is on not only this news when it comes to hybrid, but also potentially having some gaining ground here when it comes to some of the sticking points with the UAW. So very interesting tandem when we look at both of these news reports.
So best-selling truck for 46 years, for 41 years, best-selling vehicle. I'm sort of obsessed with the F-150, I will tell you. Just because I just think it's such a great American truck and car. It's just, automobile overall. And so they unveiled the new tech-packed F-150. And I know you know this, but the new looks, 12-inch mini touchscreen, new optional Pro Access tailgate.
Jeez, Nicole, chill out.
And also the more ability for more towing. I mean, some cool stuff. I live in Manhattan. I can't have an F-150. But anyway, Kevin Green, thank you. Senior Markets Correspondent. Time to spotlight Apple unveiling new product lineup. Yesterday was the big Wonderlust event. We covered it minute to minute. It was very exciting. Angelo Zeno's with us, VP Senior Equity Analyst at CFRA Research. Look, you had almost 24 hours to digest this big product launch. What stood out to you in the launch?
Well, listen, I think as far as the event was concerned, most of the features that we saw was pretty much in line with what was being leaked ahead of the event, right? In terms of kind of the iPhone 15 and the Plus models, your more standard models. I mean, you got a lot of what we saw in those those Pro devices last year in terms of kind of the A16 Bionic processor, in terms of dynamic island and what have you. But it's all these days. It's all about what Apple throws in those Pro devices. And on the Pro side of things, I mean, clearly more enhanced camera capabilities was the big thing. On the Max side of things, with the optical zoom embedded in there, you also saw titanium kind of added in there to make the device a lot lighter and thinner. So, and then we all
It's
know
1 gram lighter. I saw on Wall Street Bets.
Kind of changed, and that was kind of the shift away from Lightning to USB-C charging. And but at the end of the day, it was really kind of going into the event. It was all about pricing, and we kind of saw a minor change on the pricing side of things in terms of on the Max side of things, their most premium device. We think it has incremental upside potential for the iPhone 15 upgrade cycle. But at the end of the day here, really not much on the surprise side of things from the event, which is why the stock hasn't really moved much post-event.
Yeah, and look, not bad when you're seeing it not moving a lot, right? Sometimes you have big sell-off, you have buy on the rumor, sell on the news. So right now, as I double-check Apple, I just want to see how much it's moving. It's down 0.5%. Let's do a little
I got back into those puts there.
What did you think about the fact
The
that
midday chop gave away my gains already.
Expensive phone, the 15 Pro Max? Big deal?
Yeah,
Not a big deal.
Yeah, I mean, personally for us, I mean, we thought it was going to be price hike on both Pro devices. The fact that it was just on the Max side of things, we think it offers about 2 to 3 upside potential in terms of the revenue upside, the revenue estimates in the upcoming iPhone 15 cycle. So we think it's a good thing, but not the potential upside that we think we could have seen.
Yeah, at 175, is this a buy?
We think so. I mean, our 12-month target is $220, so we see pretty good upside potential. We kind of look at our estimates based on a 2025 forecast, and when you kind of look at it on those estimates, we're talking about kind of low 20s multiple right now, and about 22, 23 times. So we think that's enticing for longer-term investors out there.
When we think about the competitive space and smartphone sales overall coming down, coupled with the fact that you can no longer bring an iPhone into any China government building, your thoughts on smartphone sales?
Yeah, I mean, listen, the smartphone industry is this kind of, there is no growth attached to it, right? You're talking about the lowest run rate now at this point in time. In the last decade, we're talking about kind of declines in 6 out of the last 7 years. So it's a no growth environment in terms of iPhones. We don't expect Apple to really benefit from any sort of major upgrade cycle. I know others may feel differently about that, but given the state of the smartphone market out there, and maybe given some of the competitive pressures that could be increasing out in China, whether it be Huawei or others out there, we're kind of forecasting 4% unit growth in terms of the iPhone 15 cycle. So very modest in nature, but that's largely due to easy comps from a year ago. For those that recall, December quarter a year ago, we saw those monster supply constraints due to COVID. And when you kind of look at here over the last 3 quarters, declines when we start thinking about the iPhone 14 cycle out in the US here. So easy comps, we think, will allow them to continue to grow despite some of the challenges in the broader smartphone market.
And also, what am I missing? I mean, I want to ask you about the Magnificent Seven, right? We used to say FANG, now we say Magnificent Seven. Those are the ones that seem to be the best of 2023. But what else am I missing? You know,
Jeez,
what do
look
you
at Luke
like
TV.
here going forward? What seems to be working?
Listen, I think the key to the market here and those big 7 names here over the next kind of 9 to 12 months will really be focused on 2 names specifically. I think Microsoft and Alphabet are really going to be the key to the market here over the next couple of quarters. We've kind of now seen in terms of kind of the AI play out there, we've seen some of the infrastructure build kind of, the benefits there on NVIDIA's side of things. They've clearly been the winner here. And obviously on Meta's side of things, they've also kind of benefited from their shift in kind of their strategic shift towards a greater focus on cost efficiencies. But really, when you kind of look at who the key here for AI is going to be over the next year, it's going to be kind of the companies that are building these large language models. And it's really going to be between Alphabet and Microsoft here. So those are the 2 companies we think you need to watch. We think they're going to execute and start seeing some notable demand upside here over the next kind of 2 to 4 quarters. So that's where, at least at this point in time, we'd probably be leaning a little bit more heavily into.
Right. Do you have price targets? I mean, Microsoft, I have to go, but Microsoft today is at $335. Do you have a price target on that one?
Yeah, I believe it's about $380.
Okay, and then Google's at $135.
I think it's $145.
Yeah, so higher than, obviously you think it has upside potential. And I know you said I think, and I know I sort of got you off guard, but it's just good to get a vibe. Thank you. And thanks for being on with us today. And I just appreciate that you're able to come on with us. Thanks.
Poker time.
Angela Zeno. Coming up next, the Disruptors, George Sillis, taking a closer look at Mobileye. He has a buy rating at
1.25 mil, not bad.
What do we need to know coming up?
I'm surprised they covered Mobileye. Seems like a sketchy stock. This guy got 3s. Eyes come down a little bit here. Plan on averaging in if we get another push up. Might. It's very early still, only 11:45. Oh man. Got lucky on that one. The little bounce there on SPY. States. A little head and shoulder forming up here too. I didn't realize he was out of chips. I would have raised him. I should be raising these guys. Raising pre-flop. These two are trash. Alright. Nice, well done. Aces. Sevens. 745. That midday chop. Oh, poor guy. Do it. Barbecue talk? Anyone? What do you want to talk about? Look at the stock price. 17 cents, down 10.5. Are you able to buy it and sell it? What's your brokerage? That's been our conversation this barbecue. Buy it? Can you sell it? What platform? I click back up there. They chop. Suing. I think we'll have to go on that strong. King 8. Oh, I got the king. I'm adding some puts there. Oops. Just woke up. Wanted to add in bounce, but it didn't give us a bounce. Bluff, come on. Ah. Pretty good flush there to VWAP potentially. WAP flush. Continuing. Got a bigger position. There. It's 4-10 spades. Good try, man. Alright, there's your VWAP test. Yep. Closing out some right there. Adding in. Back in. Gotta be careful, it's not even 12 yet.
Too restrictive, or must they continue raising rates in order to tame inflation to help folks, I guess, to establish price stability?
I think that's an interesting question.
Cole's
Nicole.
quiet today.
Is the Fed being too restrictive? There's a lot of different ways to look at how restrictive rates are right now. At the end of the day, we're sitting here looking at, multi-decade high interest rates, multi-decade high Fed funds rates. So in an absolute sense, yes, very much restrictive. The question, I think the important thing to really ask ourselves is, are we really in a 2% world anymore? Are we really in a 2% inflation world anymore? Pre-pandemic, and here we are post-pandemic. When you really think about the disruptions in the labor market, the disruptions in the housing market, office sector, real estate, et cetera, I think it's a really important question. It's really easy to get forensic on inflation data, but Chairman Powell repeatedly restates his commitment to a 2% target. But the question really remains: are we in a 2% world, or are we back in a 3 to 3.5% world? And looking at how restrictive rates are through that lens, I think is a really important question to ask, because that would argue rates are going to stay steady and high, and the Fed is going to stay tight and higher for longer camp. So that second wave inflation question, and which is our base case right here, in fact, is something that I think is probably the key thing to be asking right now.
Look, and we're on the roller coaster ride. On the way down, when you start screaming, when you see oil moving close to $90.
AMC kind of breaking out there, 7%.
Joseph.
Yeah, oil's up 30% in the last 2 months. It's actually down year over year slightly. So it's actually a deflationary on the year over year number in terms of CPI. but we're definitely seeing energy prices, oil prices, really, which everybody is aware leads into a lot of different areas of the economy, being, again, an upward bias on inflation data, because that seeps into a lot of different sectors in the economy. So I think that also pressures the Fed indirectly or directly to maintain that higher for longer stance. So energy is something that obviously they exclude from their formal policy, monitoring dashboard, but it's very real for, the U.S. consumer without question.
Yeah, and Greg, I'll give you 10 seconds. Last word.
Yeah, I agree. I think
So quiet.
energy, oil specifically, is the single biggest risk factor that exists right now. It's something we're going to have to watch in the next few months as to whether or not that ripples out into other goods and services.
Yeah, great to see you both. Greg McBride and
Sometimes you get those
Joseph
midday flushies
Tabor of
bumps.
Tyco. I didn't say your company earlier. Thank you both. Thanks for being with me, friends. I'm Nicole Petalides, live on the floor of the New York Stock Exchange every single day, 11 a.m. and 2 p.m. right here for Schwab Network. So I'll catch you later, but keep it right here. Fast Market is next.
Pissed off the sound guy. Turned her way down. There's Lords coming into sulk. Kidding. Can you still buy it, Lords? G up 2.4%. DGC almost filled that gap today. 7.5% on AMC. Oh. Big green candle back up. That bounce off view up. Wow. It closed a lot more. Still chop, midday chop, just much bigger range. Bolt told everyone to donate big. People did. You went on vacation today for a week? Uh-uh. PP on PP. Why do you think? Did he say he's going on vacation for a week? Someone in chat was saying they could buy it on Fidelity this morning. They did. They bought some on Fidelity. But yeah, most are saying they can't buy it. I think everyone can still sell it. I haven't seen anything, Sam. I did hear there was a docket that dropped today, though. GameStop up 2.5. Just big range here.
Kept prices entirely the same, despite the fact that, as you guys have been talking about, inflation has been rampant for so long. So that was a bit of a surprise there. But I think in terms of, the phone, there are expectations that we can talk about some of the analyst activity. Dan Ives, I know, has gotten even more bullish, thinks that the market is massively underappreciating it. They did unveil new watch features, as you said. That was mostly on the processing side, though, so they basically look the same. And the AirPods, as far as I could tell, just have a USB-C charging port, so no huge advancement there. There was some talk about the neural engine, which is really Apple's AI accelerator, its AI Play. But there's speculation that because Apple isn't talking as much about artificial intelligence, that maybe it's lagging behind, which could also be pressuring shares as well. I will say today, Apple announced that its new operating system, iOS 17, will be available for users to download as of September 18th. That will bring about features like FaceTime voicemail, so you can leave video voicemails for each other, better search features and messages, and a new standby mode. So all of that seems to be failing.
What does GME look like? It's barcoding
really,
today.
Shares have been under pressure since those reports came out that China has banned government agencies and some of its staff from using Apple iPhones. Reuters is reporting that China's foreign ministry says it hasn't issued a ban on the purchase and use of foreign phone brands. It's just, the reports that were about the government officials specifically. They did say the Chinese government attaches great importance to information and cybersecurity and treats both domestic and foreign companies as equals. So that's a little bit of clarification, but still some question marks on that front. And the
AMC's up
analyst community
7.7
in terms of how big of an impact they think these potential bans could actually be.
Did he make that statement with a straight face, Caroline? Because that seems a little incongruous to what they do sometimes. But the bigger picture here might be the fact that whether we want to admit it or not, and this goes across the U.S. economy, our big companies and China are connected, right? You can
decouple, rallying there. Should have closed more. That was crazy.
You can
such a quick dump
diversify,
and pump.
But they're still always going to be connected, not only in production, which Apple is heavily
2165
involved with China.
Now I bought on
but
Fidelity.
In demand, right? Crude oil. There's nothing that China doesn't deeply contribute to not only demand, but a lot of production in as well. So whether we want to admit it, Caroline, our economies will forever be linked. And so the bigger issues that they have, that will always take a backseat to the economy, Caroline.
And I think that companies like Apple and Nike and Starbucks and Tesla are so reliant on China that we're probably going to continue to see the executives of those companies, for example, Tim Cook, really walking that fine line and, not disturb the peace too much. I will say Dan Ives over at Wedbush, I mentioned him at the top. He thinks
If
that
GME
China
rejects this
concerns
resistance
are
again,
overblown, pointing out in his latest note that Apple has seen
a little
massive
ways to
share
go to
gains
get there, I suppose.
in the China smartphone market, estimating that it's gained roughly 300 basis points of market share in China over the past 18 months, and thinks the iPhone 15 will continue to build on that. So he actually raised
AMC
his
built this
price
little cup and
target
handle.
following this event to $240
That
a
is
share
neat.
from $230, kept his outperform rating. As I said, he thinks that
Retrace
the
was
iPhone
that.
15 story is massively underappreciated by the market. He says Asia's supply chain checks point to roughly 85 million iPhone units out of the gates, and could be
More than
close to
50%.
90 million because carriers are expected to offer a lot of discounts, especially leading into the holiday season. And he thinks that the price hikes, he was expecting the price hikes.
Maybe
I remember
haven't
from
fully
his
completed
previous
the cup
note,
yet.
and we had talked about it, but he said it was surprising, but could result in an
Be
incremental
completing
8
it today.
to 10 million more units globally during the launch cycle because of the fact that it hasn't seen the price hikes. So he's bullish on not just China, but that consumers everywhere will continue to shell out the big bucks, even though there were no price hikes. $799, $899, almost $1,200 for the Max Pro. He thinks that the Max Pro mix will actually shift that way, and people will spend more, and that will increase the average selling price. So we'll have to wait and see.
Yeah, you wonder if this is kind of a clarification on the stress of the consumer, that they didn't raise prices because
And the valuation of Apple.
the $100,
remember,
$50 for me to buy a new iPhone, that's not going to change my mind.
I made a purchase this morning.
It doesn't.
Early this morning, I made a purchase.
Well,
But Kev, how many purchases did you make? Because I know you have to buy phones for a lot of people. And did you get one for me?
You know what, Carol? The queue for new phones in the Hinks family is quite long, Caroline, and I'm willing to add you to the list, but you have to understand, I've got, many people in that line, Caroline.
Right,
I've got a married son. I'm still paying his phone bill, Caroline. He's married.
Well, meanwhile, I have about 5 people on my plan.
There you
That
go.
being said, I will say some are saying that it just goes to show Apple's pricing power as well. So it's not just necessarily a testament to
Keep turning her
the fact
down.
that the consumer could be struggling, but that Apple could have the pricing power. Granted, we've seen those revenue declines. So
yeah, I
again,
mean,
TBD.
that's a concern also. And of course, the only phone that they raise the price on is the one that I'm going to buy. So yeah, that figures into it. Yeah, of course. All right, thanks to Caroline Wood, senior markets correspondent here, breaking down more of the Apple story post their new product release. But now let's bring in Nick Theodorakis, managing director of market risk at Charles Schwab. Hey, Nick, I wanted to get your take here on CPI, because it seems like I'm hearing a lot of rhetoric that, hey, oil prices are high. That contributed to half of the gain on the headline number. But at the same time, that's the second biggest expense for consumers, and oil prices are anywhere from $5 to $10 higher than they were when this data was compiled. So who's to say that this isn't going to continue to stress the consumer and the overall economy moving forward?
Yeah, and if you watched the number this morning and had all your charts up at the same time, you saw a big spike in interest rates right around that time, implying that this pressure, this upward pressure, guys, is ticking up the probability of another Fed hike. And you sit back and scratch your head and say, well, how the heck is it going to help if oil's up because of supply issues and people think that the Fed's going to raise interest rates further, right? That is, both of those things, are directly taking money out of people's pockets in a very, in a meaningful way. So I agree with you, Tom. We were on the show yesterday talking about, I thought there might be more of a pick back up in autos. We did not see that, so pretty happy to see a lot of other sectors flat to down in the report, but definitely offset by the gains in oil. But it's the overall transportation complex. I know we're going to talk airlines a little bit later. demand is coming in a bit there, and I think you could start to see demand for sort of travel oriented stuff slip just in general, as there's more concern about the consumer and the consumer's ability to carry this burden. We're still double the Fed's inflation target, right? You just sort of squint your eyes and say 3.74 or whatever. They're still really in that hard line stance that 2% is right, and until they waver on that, in which they certainly don't want to do in this environment, until they decide they're going to waver on that and say, we'd be okay with 3, right? I don't think you're going to see a change in sort of the correlations when these numbers come out, right? You see equities dip and you see rates rally. Oil was up a little bit on the number too, but not as meaningfully. But that has reversed a little bit, right? We've seen the Nasdaq gain some ground, like you guys were just talking. Apple's come back a bit off its lows, along with a lot of the other tech names. Most sectors are now up on the day, and you've seen the 10-year basically go back down to where it was prior. So I don't think it's the end of the world. Markets are certainly digesting.
Tickers down
this and saying,
7%.
Okay, it's energy driven. If that gets under control, everything else does look okay in this report. I'm just not sure that's going to be the case because it's a supply side issue. We've got OPEC saying they're not really going to do much about it.
Yeah, definitely. And when you look at the price of oil here, Kev, and the impact that it's going to have on different industries, we saw today out of American Airlines, Spirit Airlines, cutting revenue estimates moving forward. You've got all the cruise lines down. What other sectors or areas should investors and traders be looking at because the impact is so widespread, but what is it going to be focused in?
If you think about the U.S. economy and higher crude oil prices favor energy,
right?
And
SPY's coming back down here.
Any
I will trim some more.
From point A to point B is going to use there's no electric way to get something from point A to point B. It's all energy. It's all fuel. So every rails, right? Trucks, obviously, planes,
logistics companies across the board.
They're all focused on energy, and and you mentioned all travel for U.S. consumers.
Yeah.
I mean, it's real. If you just think you have $100 to spend in a week, and you were spending 35, now you're spending 55. That cuts into the things you can spend on other things, on the disposable income. It's just math, right? You either add more to your disposable income, or you spend less on other things.
Roblox at a low, but this thing might be about to flush.
Go ahead, Nick.
This is why raising interest rates doesn't fix this problem, guys. Right? And there's we have to bring this down. This is why it doesn't fix it. It's not like input costs are going up across the board. It's just very specific, and we've been saying this for months. I'm sorry to jump in, but I'm like, God, it's just going to continue to be sector by sector. And it's really hard to see a straight line decrease in inflation. It's whack-a-mole, sector by sector, right? It's energies today, and it was services yesterday, right? Something's going to be next. It may very well pivot back to services and the cost of labor there, because people are paying more to get themselves to work, right? So, the auto industry in general, right, is driving down, is driving themselves towards more electrification, but we know those breakdowns, right? I mean, that's not a meaningful percentage of sales yet for most of these big producers. It's a tough environment. You look at what's going on. I don't know if you guys read the news about what's going on in Germany. It was in the Financial Times this morning. There was an interesting piece on kind of their negative growth annually because of this confluence of problems. And are they tip of the spear because of the Russia energy problem, or are they going to be a sort of one-off? But you sort of think about how much their economy's been hurt by reliance on Russian energy and having to pivot away from that. It feels like that could spread, maybe in a less severe way, globally, if energy prices don't get under control here. So interesting.
Yeah, Kevin, real quick here before we go to break. When you look at the labor market, I think that's the crutch that's kind of holding everything up, because wages are going up. I mean, you're seeing some of the compensation hikes from some of the unions. Other people have to, keep their employees. They're raising their pay. Is that the crutch that if those numbers start to turn around, that's what could be, that drag down on the economy? Because, hey, Everybody's
what do you mean by turnaround?
Everybody's
what do you
willing
mean by
to
turnaround.
Well, if we get unemployment rate above 4%, if jobless claims numbers start going up on a weekly basis instead of down. Now when you said gas, you're spending $35 a week on gas, now it goes to $50 a week on gas. That's because people are comfortable because unemployment rate's low and wages are going up, right? If
and
that
wages
goes away,
continue to go up,
right?
By the way, that's inflationary, though. Remember, everyone cheers when wages go up and there's a work stoppage and they come to an agreement until you get the bill, and then you realize that's still inflationary, right? And this, everyone should understand, this UAW, it's not getting settled. This is my opinion, but
midnight tomorrow.
There's only so far. Some of these comments from Farley, from Ford, were very concerning. There's they're only willing to go a certain amount of way before they have to worry about the viability of the company. Remember, Jim, he said something very interesting. All those other companies went out of business in 2008-9.
Ford didn't. Yeah.
Yes.
Yeah. And the UAW president came out and said, "Hey, they're still shooting for 40%."
Yeah, he didn't. Yeah, they were trying to go 30.
Grace. Yeah. So that's going to be coming to fruition over the next couple of days. Let's take a quick break. We'll expand on that story about the impact of oil. We'll talk United Airlines. Stock had a good run until the midpoint of the year, but it slid sharply on the back of those higher oil and jet fuel prices. We're coming right back.
I closed a little bit at VWAP. Sketchy, not enough. Big candles midday today on SPY. Big moves. This is undecided market. Boy.
Should it? I don't know. But
all right,
all I
I'm
know
out of
is
these
from
spots.
years and years of watching the airlines, adding
Man,
capacity,
that chomp is crazy.
hits the stock. Lower capacity.
To close more down there.
Makes the stock is bullish.
Yeah.
For
Second
the
time in a
stock.
row.
So the fact that they're adding seats and adding flights is problematic for the stock. Probably not for the company, though.
Right.
It's probably more profitable at these margin levels, even if margins came down slightly. So
average revenue per seat mile. One of those metrics goes up, and that's the number of seats.
Yeah.
Maybe that hurts margins. But Nick, if you look at international travel, that's where they're adding a lot of capacity, and that's where a lot of demand is, and that's where the margins are for this company. Give me your take here on United Airlines.
Yeah, I agree with Kevin, and you'll see that kind of reflected in the trade here. I'm a little bit concerned about anytime they add capacity, especially going into what feels like kind of the first potential for a real economic slowdown. The good news is business travel is picking back up. Post Labor Day, and I think also kind of post holidays this
Almost
year.
3% on GME.
More companies getting back to sort of normal course of business, which will include travel and international travel for those companies where it's makes sense. So I think that's an important factor, and those business seats cost more. So I'll be interested to see that.
Cash been settling fast.
United's always one of the first to talk.
No, don't go heavier, Bubba. Keep blowing up accounts. Go lighter.
A month and a half, I guess it is still. But when that comes out, how
yeah,
they're talking about.
You got some other strategies.
That's a huge piece there, and it's a lot more.
Start small though.
That piece tends to be a lot more stable when it's good. The consumer, is kind of what has me.
Yeah, blocking out distractions is important.
And the impact we just talked about on not only ticket prices, but the people's ability to have free money in their pocket to spend. So far, that hasn't been an issue. But there's been some surveys out over the past couple of weeks. You see this, sticky inflation. People are concerned, and if we start to see that as a pullback, right? You could paint a picture where there was all this pent-up demand from the pandemic, and everybody's gone and done everything they wanted to do, and there is a slight pullback. Doesn't have to be a huge pullback, but a slight pullback, with uptick in illnesses again and things like that, or that isn't factored in yet. That could be pretty damaging to these stocks. You said they've had a really good run. They've come back. United's down 2.5% on the day, so maybe already priced in, but potential here for a little bit more. I think of a pullback in demand, and certainly that's not good, especially as they're increasing their supply.
Yeah, and we've already seen, as I mentioned, since those July 2.5-year highs, stocks pulled back about 20%. How do you want to look at this from an example trade here, and Nick, give it to us real quick.
Yeah, real quick. I mean, it's sort of playing the trend, guys. The options aren't pricing a whole lot in there. When you look at the implied volatilities across the whole chain, we're right kind of in the low 30s. And you don't really get a pop until you start thinking about earnings. And even that's still, still in the 30s and pretty far out. So what I've done here is just a put diagonal, and I've built in, there's $1 vertical risk here, selling an option that's a bit closer to the money to up the amount of the offsetting credit. So this is looking at the October weeklies, the October 20th weeklies versus the 9-day September 22nd options. You're selling the short-term 45 puts, and you're buying the longer-term 44 puts. So you have a $1 vertical risk in there. You're taking in you're paying about 72 cents for that. So, scratch your head, right? You're paying for a short vertical spread. Yeah, but the short-term option, the 44 is well outside of the expected range for next Friday. And then the 44 option that you're buying out in October is inside of that expected range. So you're offsetting the cost of that longer term put by selling a shorter term option, with the idea that you're playing the trend here, and that the longer term down move, assuming that you don't end up getting assigned on that short term option, is legging into that put a bit cheaper. So it's a bit of a bearish play over the longer term. The nice part about the kind of mid-October date on that is that you have plenty of time to continue to roll your short against that, assuming you don't get assigned by next week. So a little bit of a bearish play, nothing too crazy directional, but using that short-term option to offset the cost of that longer-term put, assuming the stock continues to trend a bit lower.
All right, let's look at this example trade. October 20th, the monthly series expires in 37 days, buying the 44 put. And then in the near term, September 22nd weeklies that expire in 9 days. Sell the 45 put. You're paying debit roughly. We've got about 70-cent debit on here. Takes your break evens, Kev, just below 44 and just above 47 on the upside. Got about $170 in risk to the downside, but on the upside, only about 70 bucks of risk on this. You do have some assignment risk on that short 45 put that expires in 9 days. Give me your take here on this type of trade that just expects a grind lower here just a little bit.
37 days on the ACK is a key part of this trade. And then the $170 risk, that's if you don't touch it and there's a catastrophic move. It's the 70 cents you spent on it and $1 in the width of the vertical embedded in this spread. That being said, you're collecting theta. You'll come out of the September 22nd expiration with the long 44 put, so that you can roll, you can extend duration, you can do a lot of things with it.
Right.
So this gives you a lot of options. The chart doesn't do justice to what this trade is.
Yeah.
The chart looks kind of ugly. Like, how do you make money on this thing? Well, that's because of the duration of the trade.
Right, and that's a good point because you see the break evens that we got there, and you know, it only reflects that you're going to make 60, 70 bucks per spread at or near that short 45 strike. But at the same time, you do have that ability, as you mentioned, to roll or adjust that short strike as you get closer to expiration. If the market's open, liquidity is provided. That provides some credits. That expands potential profitability. So that risk profile does have the opportunity to expand if you manage that well, and the stock reacts like you expect on that. All right, good look at that example trade there. And thanks to Nick Theodorakis for joining us. But coming up after the break, we're going to be joined by Likefolio, and we're going to have a discussion on Meta Platforms. The stock's up over 150% so far this year. The year of efficiency, Kev, 2023. We're coming right back.
Ooh. What? Kidding me? 2 pair? Man, that one hand wrecked me. We had the trips on 3s. I was paying too much of it. Too much to stay in and see that hand. I had a lot of options there. Maybe could have bluffed on the river. Probably not though. It trips. Hold it. Retesting the high there. The double top there. Bubs made it. Oh, I guess I have a full house. Slow played him. Nailed it. 4. A double top on the market, really. The midday chop. Okay. Hey, Jay. Me holding almost 3% there. Right back up. Stop loss hunting all over the place. Diamond's got there. Whatever. There, yeah. Buy right right back down. It's 12:30. Oh, I should have checked. Evans. Oh my gosh, how did I not get there? Just, how many cards could I have gotten for that?
Now, Tom, the expected move about $24. I went $25 below the market, and so that's where I'm willing to
Plus buys come down to VWAP.
passively long trade in Meta platforms that'll give me a significant amount of downside where I don't get hurt. So I went to the October 13th ahead of earnings, 280, 270 put vertical, Tom. I sold it for, it's trading right now about 125. It looks like it's lining up at, because the stock's rallied a little bit.
Yeah, we have 135 on the example.
The stock's rallied. I mean, the stock is up, $5 today.
Right.
So it's rallied throughout the day, but that's where I'm willing to make some type of bullish bet. It's only got about just under 7 deltas, Tom, collecting a little theta, but you've got 30 days on this trade. It's high probability. It's collecting theta. It's risk defined. If you want to play this from a long side, make it a passively long side trade, Tom. That's my view here, because I think in some ways it's overvalued.
Yeah. And this is a way where, if you use that baseball analogy, try to hit singles and doubles as opposed to swing for fences. If you're, moderately bullish or at least neutral on the stock. October 13th, a weekly series, 30 days till expiration. Kevin's looking at selling the 280 put, buying the 270 put on this example. Collecting roughly, we've got $1.35 credit on there. It's about a dime lower. Stock has moved higher, as Kevin mentioned. That takes your break even down to 278.65. That's right at or near the 100-day moving average, which might be an area of support. But with each spread, it's $10 wide. You've got about $8.65 or $865 in risk per spread on this. But as Kevin mentioned, you're giving yourself that cushion to the downside before you start getting hurt on a trade like this.
80% probability of out of the money.
80% probability of finishing out of the money. And that's why those trade-offs we talk about, Kevin, you collect a little bit less option premium of what your potential reward can be, but you've increased the probability that you're going to be successful on that type of position. So good look at a short, neutral to bullish put vertical there in Meta Platforms over the next 30 days. All right, coming up
probably
after the break, we're going to take
probably
a quick
before
look
some
at
downs, but
Moderna.
don't know
The
yet until it breaks
vaccine maker
out.
is popping today, but still down nearly 40% so far in 2023.
I mean, unless you got it at the
Fast
right
Market's
time.
coming right back.
If you're green on it now, might have a red day on it tomorrow. Got what? We still have initial jobless claims or whatever. Is that it? So that comes out bad. Depends on where you bought it. Like, I had SPY puts today that did well. Oh, it's up. Well, bottom up here. Buy right. But yeah, it's consolidating. So the theta farmers are winning. Winning on GME the last couple weeks. At AMC. Not at all. We had CPI this morning. So I think it's PPI, or is it? Yeah, initial jobless claims and PPI. So both those tomorrow morning. And US import prices Friday. Yeah, mostly just, I guess consumer sentiment too on Friday. That moves stuff a little bit. We'll tick up there on barbecue. It's down 5%. Today. Alert out to the Theta Farm members on YouTube. Average in. afternoon, Brad. Liquor bounce. Not really a bounce. Move back to VWAP. $69.69. Brad, I have some October 10 calls on AMC also for October. Nice, yeah, new high there on AMC, 8.65. GME also high the day, 3.5%. AMC's moving there, 10%. Almost filled this gap. 846 is this gap. Next after that's 1344. Oh, really close. Oh, sorry, 859. Smaller time frame. Yeah, top just ended up consolidating. Win for the Theta farmers. It all's volatility, hike up the premium, and then just consolidates flat. Crazy.
Medicines into clinical trials. But George, if you're betting on Moderna, you're betting on half of the U.S. population gets a flu shot. If you can get the coronavirus, the vaccine numbers up to that level, they say it's between, depending on their market share, $8 to $32 billion, George. That's really the bet, right? Until the next big thing comes along.
Yeah, I think in the near term, contingent upon some seasonal effects from flus or COVID-19, there could be essentially a pretty nice catalyst for Moderna. I think at the end of the day, you just look at the profitability.
Have you legged into spreads before?
Last year, they, like I said, earned about $11 billion in sales, but they had about a $1.2 billion in net income. Now,
you might like that trade better than
opening
up a strangle on something with high IV.
They earned about $19 billion in sales, but they actually brought in about $12 billion in net income. And I suggest that the reason being is that there was a huge amount of government subsidies to deploy the vaccine. That was a very profitable year for Moderna. I can see why the stock made that huge run up and, of course, hitting that $390 high. But now it really comes down to, stable earnings. I think at the end of the day, there's, of course, going to be still demand for COVID-19 vaccines, mRNA-based flu vaccines, which they're going to be leading in. But again, you have to think about the expenses associated with R&D to develop these new drugs that they have in the pipeline. So, I'm going to look at the technicals. Right now, you can look at the weekly charts. It's not trading very well, but just keep in mind that, things can change, especially as we move into, cold and flu season, which is coming up in the fall and, of course, winter.
Yeah, definitely have to keep an eye on that. And I guess insurance is going to be paying that $129 fee that they're going to be charging.
And
I think this does rely on the fact that our consumers or our people are going to take another shot, because the new variants. Does it work on that one? Yeah, they got a lot of questions to answer, but a great pipeline so far. All right, thanks to George Tilla, senior markets correspondent here, breaking down the story on Moderna, up about 2.25%, Kev. As I mentioned, this stock was much higher earlier on in the session. Hit its 50-day moving average, and it's pulled back. It's hit above its 50-day moving average over the last 8 or 9 months, Kevin, probably about 3 or 4 times. Failed every single time. But now there's some clarity around this. They said, as George mentioned, that by 2025 they expect a flu, COVID, vaccine combo to come out. So, give me your take here real quick on Moderna before we get into the trade.
The fundamentals of what they're doing are pretty impressive, right? They're using kind of a different. They unleash the human body to fight infection, and it's kind of a different way to do it than we've done in the past. So, is their future bright? I think it is. They keep doing right things. They've got a great head start with
AMC still going.
The coronavirus vaccine. So now they're playing with a little of the house's money. Remember, 15 new products and 50 medicines going in for clinical trials.
Right.
They've got that thing that you want in this industry, which is pipeline.
Right. So example trade here, Kev, that I came up with is basically given duration on positioning. If you think the stock's going to rebound, this is good news moving forward. How do you want to play this? So I looked at buying a call vertical, Kevin, because implied volatility is relatively low despite the slide in the shares. And I went out to the January cycle, so giving myself plenty of duration on this one, Kev. I know that we had earlier, I think we've got 620 debit on this, where we're buying the 110 strike call, selling the 125 strike call against it to offset some of the costs on the bullish call that you're purchasing. It's trading closer to about $5.50 now because the stock has slid down. But the debit that you're paying in this example that we've got on the risk profile, $620 per spread, with the concept that it can go up to $15 wide if it gets back over $125 per share.
Yeah, you do have to those contracts, which is good.
Because it's pretty straightforward. If you think it's going to rebound, instead of maybe buying the shares, but still giving yourself some duration of about 128 days.
128 days on the nose. And so, it's a vertical spread.
There was sixes.
$15, you're spending about $5.50 for
4 sixes.
With the chance to go to $15, you need movement though, right? And the trade-off that we talk about all the time with options is, if you got almost a 3-to-1 payoff, it's probably a low probability trade. But if you're bullish in Moderna and you see upside and you're reading and you see it, if it has a chance to go to 125, you have a chance for a multiple winner here.
Yeah, and if you look at the price on this type of vertical, Kevin, this is why I looked out in January. If you just go to the November cycle and do that same spread, it's only about 70 cents less expensive for less duration on that. So you have to look at maybe your duration when going into directional plays. When do you think the stock is going to rebound?
It's fine, rallying there
example,
now.
We went out to about 128 days here.
Use the Analyze tab to price it.
Right. Good tip there. All right, that's going to do it for Kevin and I here on Fast Market. But stick around right here on the Schwab Network.
Stick around.
Next Gen Investing's coming up.
Stuff going on. Triple top in here, maybe. Missed a nice entry. I got some puts there to maybe play this chop a little bit. And if I just so happen to get the right side of the continuation, it'll be nice. Otherwise, That closed out enough. Excuse me. Beat me here. Repair. Wasn't expecting that. Got him. Gotta go all in, dude. Gotta do it. Go with your ace. Checking it off, alright. Yeah, AMC is a little jumpy. Jumpy. Excuse me. Wow, 3.5% on GME. Finally some volume back in the stock since earnings. So movements might be more pronounced. Maybe start seeing larger moves now. We have since earnings, bigger days. Options are probably a little more liquid. IV is a little higher on them. Bad, just a nice dump. Get the buyers to pile in. Shorts to close. GNS.
On the show, we'll be kicking things off here with our upvote and downvote segment. We'll chart and trade those upvotes, and our FOMO name is a name that's moving pretty significantly to the upside, although giving back some of that initial strength. That it's Moderna as it's testing its
Why do they say it so funny?
Flu vaccines,
Moderna.
to diversify its product pipeline. And we'll look at
Moderna.
Match with an upgrade today, although shares are slightly lower. And last but not least, we will visit some of the airlines, specifically American Airlines, trimming its third quarter outlook.
They've been trained on how to say that name.
Collective weakness and pretty much
By
all airlines
Moderna.
across the board today.
It's almost a throwback show, it seems, Jenny, to times that I'd rather forget. We're talking airlines, vaccine makers, online dating, and electric vehicles. So tons to get through. Excited for the show. We'll go back in time here a little bit with some of these names. But as always, upvote, downvote, not endorsements, not recommendations. Jenny, very auto-themed here. I say EV, but that's really not. That would be sounding short. We got legacy makers in here, too. Let's kick it off here with Tesla.
Tesla, which is having a really nice week. I know we saw shares pull back about 2% yesterday, but they gained 10% on Monday's session and are seeing strength today up over 1.5% here. with some analysts reacting to the movement thus far. Morgan Stanley, which remind you was the initial analyst that sort of spiked things on Monday, did reiterate Tesla's overweight, saying they're standing by their recent upgrade of the stock despite some investor pushback. They were sort of, I'd say, not necessarily the cause, but a contributing factor to that 10% spike. That analyst did give a street high of $400 a share, saying it's time to buy the stock. The firm said if limiting the scope to only making and selling cars, Tesla is still significantly overvalued as an equity, but their case is that this is a much more diversified company, no doubt, which of course is pretty much the bullish thesis at this point. UBS did also initiate coverage on Tesla with a neutral rating and a $290 price target. This was part of a broader note, which we'll discuss more, but they said they actually prefer GM and Ford to Tesla right now. They did have a buy rating in early January, but since Tesla has, of course, undergone several rounds of those price cuts and shares have more than doubled. This name, we have about 40% of analysts covering it. I do have a buy rating. We do still, though, have 20 holds, so it pretty much almost skews evenly at this point from the buys to the holds. The average price target of around $240 a share does imply around 11% downside.
We've talked a lot about Tesla and its maturation, particularly in how investors in the street look at this stock. It's been a name that has at times been extremely polarized, still is to some extent, but has gotten a lot more neutral ratings in recent years. You talked about that breakdown being a lot more even between neutral and buy now. But it's been a buy apparently this week. The stock's been doing quite nicely. It's doing nicely once again today, and so we'll keep our eyes on Tesla as we do. What more is there to say? I mean, this is the name that dominates this space now, whether it's limited to autos or not. It's like the premier car maker.
It is, and it's up 120% year to date still, even with some recent weakness. So still on an absolute tear, all things considered. Our next name, though, is GM, and GM was, I will say, one of the favorite, if not the favorite, of this UBS analyst that had the broader note today. They did reiterate their buy rating with a $44 price target, believing that this UAW strike is likely, but thinks that GM stock is underperformed heading into the union strike. And they think that typically we see, once the strike ends, that we can see some outperformance from a name like GM. They said this happened historically back in 2019. The same thing could be happening now in present day. GM stock is down about 17% just in the past 2 months alone, as investors do fret over some of these labor negotiations. With the bad news weighing on shares, they do trade now less than 5 times their estimated 2024 earnings. They were trading for about 7 times earlier just this year, just goes to show some of the weakness we've seen as of late. But with some of the recent upgrades, now about 56% of analysts do rate this name a buy. That's slightly ahead of the average buy rating ratio in the S&P 500 at around 55%. The average price target for GM is $50, which does imply almost 48% upside. So the analysts do see at least this name rebounding from, of course, that looming deadline from the UAW at 11:59 on September 14th.
I think the chart looks quite interesting, almost like a sine wave, seems to be at a pretty critical level. But, you know, Jenny, I like the logic here from this analyst. It's this idea that, hey, we all know this is coming, or pretty certain it's going to come, be a surprise if it doesn't. And if the surprise happens, that'd be positive for the
Trey's,
stock.
I'm proud of you
If we
for becoming an
already
expert
know, what's the shock?
after these years.
The markets aren't just waiting for
You're
this
now
to
an
happen.
expert.
Largely, this is priced into the negativity that we've seen in this stock. And so it's this idea of selling the rumor and then potentially buying the news once it actually happens. Of course,
Popping up
it doesn't
33%.
have to happen that way. It can happen down the line as a resolution
Woke up yesterday.
comes to terms down the line too.
Continuing
So
today,
I like
probably a
the
nice
thought
trade.
process. I think this is a lot more critical thinking being applied than just, oh, this is a negative story, it must be negative for the stock.
Isn't that thing?
Sometimes negative stories are opportunities. I think that's the avenue that this potential
Someone will make money on it.
or this analyst is laying out for investors.
And it feels like with some of these deals, and of course just watching some of the strikes this summer, in the final hour we always end up getting a deal. At least I'm hoping so, because it does impact around 150,000 UAW employees. But next name today is Ford. Ford did have their own specific news. They announced plans to double the production of their F-150 hybrid pickup truck, reacting to some of these slower than anticipated sales of their all-electric vehicles. And Alex, you have been saying this for quite some time, that you didn't really understand the concept of a fully electric vehicle just based on the demographic it's serving. And it seems like that is actually what we're now seeing reflected in some of Ford's sales. They are also aiming to ramp up sales of the
3.5% on barbecue
model during the 2024 year to about 20% in the U.S. Specific production figures were not disclosed, though. UBS also initiating Ford today with a buy rating and a $15 price target, suggesting that on average, given about 4 weeks of a strike at each of these D3 or Detroit 3 auto companies, they see that if this strike occurs, it too will pass. Pretty similar to what they said about GM. Now, they said margins should improve on some higher volume from Ford. Now, about 39% of analysts do rate Ford as buy with an average price target of $15 a share. We've joked that 14 is sort of that magic number for Ford, although it's been holding well below there, still below around $13, even with a nice jump today.
It's like a range, right? 10, 15 bucks. That's where this thing has been for literally ever, it seems. I know it ventured above that, for a little bit of time. Towards the end of 2021 into 2022. But for the most part, this stock has been relatively range bound in these kind of lower teens. But you know, Jenny, when it came to the all-electric pickup, not electric vehicles as a whole.
Yeah, Weeble still showing barbecues.
It's just the demographic,
action.
It's the use case of the vehicle. Many people have a pickup truck.
15 cents, now it's up to 18 cents.
They have it
Down
for work
$4.95.
purposes. They have it
Almost
for
5%.
a long, long time. There's so many questions still, and when this early stage
See
of
what level
all-electric
turns into
vehicles,
resistance.
if you're in a rural area, is there infrastructure for it? How long does it last all electric? What does maintenance look like? And the fact that it carries a premium price tag on this. There's not a lot of used vehicles to choose from here in this space. So I'm pretty sure those dual pickups, the 6-wheel ones, the 3,500 ton ones, or whatever they are, those things can pull a lot more than an all-electric F-150. So it's just not in that marketplace entirely for some of the cases that you have for these different pickup trucks. That's why I've always questioned it. It's like, yeah, it looks cool, but in places where there's a lot of electrical charging stations, maybe California, Arizona, that area, sure, it can serve some people who just want to drive a cool F-150 and want it to be all electric, but from a work standpoint, I'm not so sure that it fits that demographic. Maybe the hybrid will be a better fit.
And that's a really good point about the infrastructure, because we live in a bubble living in an urban area, but you forget that the majority of the country doesn't live actually in urban areas. So there is that charging infrastructure to consider here. Our last name today, though, is the name making a pretty significant move to the downside, down about 2%, is XPeng. We are seeing some collective weakness in these Chinese EVs after Brussels did share plans to launch an anti-subsidy investigation into Chinese EVs that they said are distorting the EU market. This was from European Commission President, she did announce this during her annual address to EU lawmakers. The investigation, though, does come months after planning and reflecting on some of these EU's concerns regarding China's practices in the EV trade. EU member states, which does include France, demanded that the probe be to protect some of their domestic car makers from losing their market share in the EV sector. Now, European car makers have raised several concerns about Chinese imports, citing lower energy and labor costs as giving Chinese models this competitive advantage. To counter this, some European car makers are considering building more affordable EVs, now sourcing outside of Europe and importing to compete with these Chinese counterparts. While Chinese brands did hold less than 1% of the EU market in 2021, their share has risen, more than double now to almost 3% in 2023. And in the EV segment, Chinese manufacturers do account for around 8% of vehicles sold. So relatively still small footprint of the overall EV landscape. Although I find this really interesting because all we ever discuss is the US's tensions with China. I just think interesting now to see the EU also taking measures against China to control some of their own imports and exports in the auto space.
Yeah, this is a story about NIO, but the story is almost a greater macro story, and it's really one where a lot of Europe is still a little bit manufacturing heavy, and with some of the geopolitical tensions of the last couple of years, energy costs have skyrocketed in Europe. It's made it much more difficult for them to be competitive in those landscapes, and we're seeing the fallout. We've seen a very active EU from a regulatory standpoint recently, and we'll see where it all shapes up. But weighing on NIO shares here today, from a conversational standpoint, the most timely one, though, I think, Jenny, is clearly Ford and GM combined with this UAW auto strike hanging in the balance here. Those are the two names that I think garner the most attention right now.
I do too. I think that right now Ford and of course GM, it's amazing to actually see shares rallying on the session given the fact there is this looming deadline, but perhaps
all right, AMC, let's see if it makes a VWAP test.
Like we talked about, is being priced in. So we'll be diving into the legacy auto players, that of course being GM and Ford. We'll be looking at some example trades as well as some technical levels to keep on your radar coming up next.
What the heck? Take your queen and have a vacation. You had a freaking queen. I wondered if you were slow playing me. Bye. Hopping. Literally slow playing. He's giving all his money to the dealer. What the heck? Gotta call that. Ooh. Wants to go all in. There you go. Oh, I didn't put you all in. Thought I put them all in. 20,000. I meant to put them all in. Whoops. Twice. Failed twice. I guess a min raise is like relative to their chip stack. I don't get it. I don't get why I kept doing that. AMC already trading pennies without the reverse split? Yeah, this is 83 cents on AMC. Well, you also have to consider it was at $40 before it sold off from the split, so there's not much logic to it any way you look at it. This sell-off is not warranted, in my opinion. Am I gonna make its move? You have hearts? What the heck? LAC cards. Let's check them out. Me? I will survive. I think. Join us in the expert market. Maybe. Their financials are a lot better than barbecues, I believe. And they have the opportunity to dilute some more, which would cause some selling off, but help their balance sheet at least. Got bluffed out by both those players, I think. 5. Not at all. Get out of here. Sorry guys, too loud. I could have called them those bluffs, I guess. They were just... I didn't like him. Excuse me. Before expert market, though, AMC's got OTC you could go to. Barbecue's been on OTC for like 3 months at least, 4 months. How long has this been? Yeah, that's a long time. 1, 2, 3, 4. Yeah, over 4 months.
Forward now, which is making a nice move higher today, up over 2.5%, Rick. And back to your Chicago snowstorm analogy, I think that if you had an F-150, you'd be in a pretty good spot, because I know from driving too many winters in Chicago in like a very, very small car, I wouldn't mind having a Ford F-150.
I used to drive one. It was a great car. But, you know, not a recommendation, obviously.
It's a truck.
But, this chart is also stuck here, kind of not to the same degree as GM, but definitely
a full house there. What the heck?
A strong directional move one way or the other with any kind of lasting, like, staying power here. You can see that the recent price action, we had this almost mountain type shape here, a large rally upward,
Mountain type shape
to the tune of about I'm not sure a percent exactly there, but it was from about 1150 to 1550 there, and then we almost completely lost all that upward movement.
It's
here.
made it,
but we did still make a higher low here, still trending upward off those lows, and then you can see during the past couple weeks we've made our way back up from below the 21-day EMA. We also crossed above the 63-day EMA today. We're hanging on for dear life at that point right now, near the 12.
Get cards. I can slow plays, guys.
We're about a
Prime.
penny above that point. So that would be a really interesting spot to watch as we head into the close here. We want to see the bulls would want to see a close above that level. We do have also a short-term uptrend in play, and we did cross above our volume profile point of control around 12. So the technical picture is improving in the short term. So this is another one of those situations where we have some signs of potential early trend change here, Jenny.
Okay, and again, revisiting the bottom of your chart here, well, RSI does look similar to GM. I can even identify that we're seeing at least some breakout above the midline. So walk us through that.
Yeah, exactly. And we had an interesting situation here because we had a very similar development to our last chart here, where we had a push above the 21-day EMA, but RSI did not make its way above the 50 line at first. It did play out in this case to the upside here. Now we're breaking above another resistance point here, and the RSI is pretty firmly in the bullish side of the camp here. So that would be more of a bullish sign as well in terms of momentum here. As I said as well, you know, price is the most important thing. So we'd want to see that nice close above the 63-day EMA because that would be another bullish signal here. The RSI is more ancillary. It's more what you use to confirm the move, or rather provide greater confirmation to the move, not necessarily confirm it. But that's kind of the read on momentum, is that we're breaking out to the upside in line with price.
Yeah, so now what to watch for as far as some key price levels here. Again, same with a name like GM. We're ahead of this pretty major catalyst for shares, although seeing a nice breakout today, obviously.
Yeah, and if we do start to falter, that yellow 21-day EMA comes in at about 1230. That would be 1 point to watch in the short term. You could also perhaps look for where we formed this gap from yesterday.
Everybody call.
We hit highs of around 1291 or so yesterday, or excuse me, 1259. And we could see that that would be an area where you look for that gap to be filled. That could be one area to watch. But to the upside, probably the first place to look for would be around 1309 for our purple 252-day exponential moving average. Then about 1365, that was the opening of a small gap around that area.
All right, so basically watching 13 to around 1365, 1370 here in Ford shares, which just goes to Alex's thesis that we're always sort of stuck between like $11 and $15. We will leave it there. Great breakdown on both of these names. Rick Ducat, our chart master. So trading this name, Alex, also leaning into some more bullish activity. Walk us through what you're thinking.
Yeah, first off, it's a lower price stock. It doesn't have a ton of implied volatility, so the options have very little premium. That's going to kind of remove some strategies, but possibly bring others ones into play. We've talked about
totally
covered calls and things
here
of that nature at times, but we're looking at something a little bit different today. We're looking at buying a call zebra.
With the high card.
Acronym, zero extrinsic back
ratio.
ratio.
Up there on the river.
This is seeking to create a risk profile that acts like stock to the upside, but acts a little differently to the downside. And what we looked at in particular, going out to November, so that's full 2 months away. Getting as much time as possible here.
New high in the day almost.
Buying 2 of the 12 calls, selling 1 of the 13. So typically when structuring this, it's 2 about the 70, 75 delta calls that you're buying and selling 1 of that at the money around 50 delta calls. So that's what you're getting here. $1.80 debit. To find the break even, basically just divide that by 2, you get 90 cents, add that to your long strike, you get to $12.90. So just above the current share price. Your risk is limited to that debit spend, so it's 180, and it has unlimited max profit potential. So it's going to act theoretically like stock shares to the upside. You can see that max profit unlimited, but it acts a little different to the downside. So there's always trade-offs with this. First one is, well, actually there's a couple, but first one is it has an expiration date. Stock shares don't necessarily have that, so you don't have to worry about those expiring on you. Secondly, if you were a shareholder in something like Ford and they paid a dividend, you have rights to that dividend. You may have rights in voting and things. You're not going to have that if you're just buying calls. And most importantly, in my opinion, when it comes to this strategy, the key difference is if you bought shares, 100 shares of stock, and it went down to $12, you'd be out 90 cents, which would be $90. In this case, you have twice as much risk down to 12. 180, and then there's no more risk after that. So that's the real key trade-off here when you're looking at this, is twice as much risk to your long strike, then the risk is done. But it's a lot more capital efficient than buying 100 shares of stock in this name at $12.90. Does that cost you $1,290? This only costs $180.
And I like this. 2 different ways to look at still bullish example trades and names that oftentimes trade in tandem, but often do trade in different directions, as we've seen Ford slightly outperform a name like GM, at least on a year-to-date basis. But that does it for this segment. Now, coming up next, it's time for FOMO. So we are looking at Moderna as it's eyeing flu vaccines to help boost its overall product pipeline with a nice 3% move to the upside today.
What? doing this? Oh, the worst one. The 7. Alt, look at him. Take me out of my misery. There you go, 1 1/4. That is neat. Maybe we should have gone all in on that last one. Guess she is chip leading. Yeah. Should have gone all in. I guess she would have called anyways with that low pair. AMC is up 8 1/4. Dang, that was a good one. It should have stayed in there. Punt it. Hearts.
Specific news all year long they have secured for their government contracts and funding,
and
they've even given better guidance for the back half of 2023. So, I mean, with this nice run up we've seen in shares, it's up 145% year to date. I mean, do you even classify this as a meme stock per se anymore?
No, and I never have, honestly. Yeah, I stopped kind of using that term because we are seeing some companies like Palantir, even C3.ai for the most part, starting to separate themselves from a lot of the hype that's within the trading community, especially when you talk about the memesters or what have you. And so what I would actually kind of look at right now is the fundamentals for the company, which continues to have improved, then also the leadership of the company as well, these companies as well. The leaders have really been able to lay out a landscape on how they can grow their business in a responsible manner. You're not seeing a lot of these adjustments or tweaks in financial engineering, if you will, when it comes to the share price to try to appease shareholders. They're really trying to focus on the strategy at hand, focusing on those fundamentals and seeing areas where they can expand their market cap and market share. And that's really what Palantir has really been focusing on. And, you know, they really do have a hold when it comes to the energy market, some defense sectors, but there are some opportunities to be able to expand market share in healthcare and even some industrials as well. So I think that's why I would definitely separate it from the meme stock crowd here. Let's see what they're actually able to do. I mean,
Palantir, I talk about sometimes. I've got a short position on it.
Table right now at the White House, or not at the White House, but in Washington D.C. and working with a lot of
Ace has
to try to
Ace I think has shares, but still
when it comes to AI in general. And so you know, a meme stock player really wouldn't have that seat at the table, and we do see that Palantir does. So I think that also attributes to the validity of their business.
Yeah, Kevin,
Stupid
I could
ball.
not agree more. And I even think the term meme stock, I try to use less and less because it's like, what does that even really mean? A meme stock?
Oh, now you're asking?
It's never really made any
I'm using it for 2 years.
It's so important, like you said, to look at the fundamentals of each company and differentiate them from some of the other names that do see some large volatility and, of course, massive swings. We will
both
look there,
called.
great breakdown on all things Palantir. Kevin Green, senior markets correspondent for the network. Now it's time for FOMO. I'd like to bring back in Alex to look at all things Moderna. And if you thought it was 2021, well, it feels like we are back here, Alex. Although not seeing the same degree of this name was absolutely on a tear back in its peak. Not quite the same activity, all things considered, with a nice move higher today. It's still down 40% on the year.
Yeah, and this nice move higher wasn't that long lasting. And to me, that's
chopping
the
for a
story
rip
when it comes to
or
a
a
name
dip?
like Moderna going forward is the hype's not there anymore. You know, the fear around some of this, you know, let's call them, you know, diseases or infectious diseases isn't there the same way that it was. The requirements, you know,
it's got a nice head and shoulders on there.
To go into
I don't
bars
know.
and restaurants in some places isn't there. And so the incentive
huge
to
rip.
go get this,
A lot of the stuff
if
had
you're
this
not
huge rip.
scared about it anymore, or you
not
don't
that
have
bullish
to
on.
have it for employment, isn't there. And so to me, that's
big
really
fan,
what
though.
it comes down to for Moderna. So all of this has been building towards what else can they do besides COVID vaccines. They've yet to do it. So I know they're working on stuff, but in the end, like, that's what it has to do. And whenever we talk to these biotech companies, look, this is the area of the market that needs the most
What goes
amount
up
of
7.3?
you know, homework done and digging and understanding. It's tough. I mean, this is high tech stuff. It's difficult to understand these pipelines. But when it comes down to it, they got one product, and that one product isn't as sought after as it was 2 years ago.
Yeah, right. I mean, I didn't even realize that their COVID shot is their only commercially available product, which is obviously concerning.
And it's the only one it's ever had.
Nice bump on
So
Funko.
this was really just a pure, I mean, this is a COVID pure play, if any stock is. But the news we got today specifically is about them diversifying outside of just that COVID shot. They did announce that their mRNA-based flu vaccine did produce a stronger immune response against 4 strains of the virus than what's currently available here in the U.S. in this late-stage trial. This clears the way for a path to approval in the U.S. This was a major sigh of relief after the company pushed back this experimental flu shot back in April. Their initial vaccine formula did not accumulate enough data to determine its efficacy. So Moderna has really been efforting ways to beef up their pipeline and, of course, become known for just being a COVID vaccine company, which won more approvals from the U.S. regulators just last week. So they are still getting at least some development on their COVID shot. But when you take their COVID shot, which, of course, like we said, is their only real available product at this point, and you consider right now the way that they generate their revenue, I mean, right now that is the bulk of how they're making money. Now, I did recently read a headline that we are seeing now more COVID shots available for boosters this winter. We have seen a steady rise in cases in the last few weeks, which I really
Fine,
hate
you
to
high the day
discuss,
there.
but that is something that obviously benefits a name like Moderna. Now, with this shot, as well as some of their other experimental vaccines, they expect this will make up around $15 billion by 2027. But of course, I'd say it's very difficult to pinpoint or sort of gauge the direction of the growth for so many of
Dude,
these
you know you
various
don't have a
stocks, just
king.
given the ongoing, very fluid situation right now we have with so many of the flu and COVID and various diseases. They did say they
You have a
expect this
king?
decision from the FDA
Why are you slow
on
playing
an
me, man?
mRNA vaccine by
Like,
April.
triple
The
my
company
chip
did
stack.
highlight they are now 3
What the
for
heck?
3 on advancing respiratory
I guess
disease
that's why.
programs past their positive phase 3 data. They are holding a conference
That's
on
why
what
coming
some
down
of the
now.
R&D will look like behind this
Chop, chop.
co-development today. Actually, it would be ongoing right now. But of the analysts that cover this name, 10 buys, 10 holds. I did see a few underperforms. Average price target right now of $181 a share does imply around 64% upside, but it's difficult to look at this name. It's trading at around 108.63 right now, and you consider $181 where the street thinks it'll go. I mean, this name traded almost $400 a share, Alex.
Okay, so you said a lot, and I'll be honest, I was listening. Doesn't mean much to me. Like that is so deep into the weeds on this, and I think I speak for a lot of people. Is like, I don't understand what you're talking about, but pragmatically, I can talk about this. They have a product that doesn't have the same amount of demand that it used to. That is a fact. There's less and less people going to get these shots because they don't necessarily feel the need, or maybe they do. I don't know, but it's just fact. You look at the amount of revenue that they generated from COVID vaccines. It's a fraction of what it was. And so unless there can be that spur of reason to do that, a waning amount of people are buying their product. All the while, they're spending tons of money, which they made a ton of money. No one's discounting that over the last few years, but they're spending that money now to create new products, and they have failed thus far to get one to market. And so I look at this from a pragmatic approach as,
Market 2 is just not that good.
the stock price has reflected the reality of this stock, which is the best days of the recent years are in the past. They have to do something to change this trajectory because at the moment, these exciting news stories last for a couple hours.
Right, and I mean, with these volatile swings, these are names that, it's like the giveth and the taketh. When looking at this chart, especially given the fact that it's still down, like I said, 40% this year. And actually, I misspoke.
Waiting for the SPY to rip the buy puts for the sell-off.
Not 400. So street high
I don't
price
even
target
understand
right
what
now
that
among
means.
analysts is around like $430, which wouldn't even be close to the
To
near
rip
$497 peak
the
it
buy
once saw.
puts.
So I would say when
Is that a
trading
sell-off?
this name
You're
out,
waiting for the SPY to go up or down?
is a little bit to the downside, I will say, without some of these procedures and measures in place from the government.
Pay attention.
We were
What's
at
this guy
one point
doing?
forced to get a lot of these vaccines. That is gone now. So that was serious demand for Moderna that they can't account for pretty much every year now.
And beyond that, it was paid for, right? And so, like, is that going to be into perpetuity? Is this going to be completely subsidized by the government? Is insurance going to cover these things? Is it going to be covered by
two pair. Full
employment?
house.
There's a lot of questions that I think complicated.
He was hoping I'd raise there on the river, I bet.
An optimistic viewpoint on this. I think that's fair.
Guess it was kind of an unusual check.
They have technology that can be used in a lot of things. It just
They psych
isn't
you up.
yet. And so that conversation, bullish-wise, might just be a longer-term conversation. In the near term, I mean, you just look at recent past, and again, past performance is not going to be indicative of the future. Every single pop in this stock has been met with selling in like a matter of weeks, if not days, if not hours. And I think if you look at this most recent one, it's been hours. I mean, the stock's a pretty big red candle today, even though it's up. It opened on its highs, and it's been moving lower ever since. And so I looked at a strategy that would benefit from a move back towards sort of the lows that we had seen in this stock in its recent move. Buying a put diagonal spread, going out to November, buying the kind of at-the-money strike, which is around 105, selling October, which we talked about is about 5 weeks from this Friday, at the 90 strike. That'd be just below the lows that we had seen. This whole spread trades for about $5. That'd be $500 in risk. At the November expiration, if that October option was never in the money, the break even would be 100 in that case if nothing else happened with this trade. But in the interim, it's going to have a different break even, probably closer to where the stock is now, maybe slightly lower. This is a strategy that looks a lot like the put calendar spread, except it's tilted on its axis to remove the downside risk. And so if you want to kind of do a couple things, one is make it I guess, investment or a trade that is looking for an increase of implied volatility. Oftentimes you'll think of time spreads like calendars and diagonals, but if you want to add a directional component to that to remove that overshooting of the downside risk, the diagonal spread seeks to do that, and you can see that with the risk profile. literally just the put calendar tilted on its axis. So you have the best case scenario that's a move to 90, but if it does overshoot that, there's really no harm in that. You can see it just levels off for what would theoretically be a $10 profit or $1,000 bucks.
And to your point, this is a name that's already fallen 4% off of its high today, and it's down 50% from its 52-week high. So a name that is no stranger to some volatility, at least to the downside. But that we'll leave it there for this segment. Now, coming up next, we will look at Match Group as JP Morgan is giving this name some love. Another name that's down this year and down a little bit today, but at least with some positive analyst momentum. Lunita Young will have more on that story for us coming up next.
Oh, with the kicker. An aggressive raise. I'll raise that. Pocket threes. Awful. Bye. Hanging out the highs here. AMC's coming down to VWAP, looks like. One goes up 7.8. Mm-mm. Ten-2, he's telling what he has. Oh, I wasn't even thinking I had to call there. 600, 300. Got there. Oh, he got there with the flush. Oh, no way. My card, well done. Guten Morgen. Guten Morgen. Qualm calls? And UPS? Like Qualcomm calls? I'm not in Qualcomm calls. Oh yeah, we call it Guten Morgen a lot here. I guess we more speak German. Guten, not good. Guten Morgen. I'm not in Qualcomm calls or UPS calls. UPS calls because of why? Melt up on SPY. Ugly choppy day. Gains in the morning, get back in the afternoon. And it reversed. barbecue is now green. Look at that. Sense. Yeah, I saw UPS. I like the support. Supporting UPS. Nothing like breaking new supports. Again, hope the trade works for you. Was this sell off because of the strike? Didn't they go on strike? What's the news on Funko? Anything? 10% owner Chan Kenneth Yangtze acquired a total of 110,000 shares, an average price of $6.96. Cost around $766,000. Nice. So the owner, 10% owner bought more. I like it. Funko calls haven't moved at all. They're out the money. I don't think the options are very liquid either.
On the year. So this now we're up 6%. I had to actually double check the year-to-date performance just to make sure I was looking at the name correctly because of the collective pullback in so many airline stocks. But Americans has been pretty brutal, so no one better here now to discuss this because he's our balance sheet
Wednesday,
expert
huh?
on all things American. I'd like to welcome in George Tillis, senior markets correspondent here for the network. So, George, I do know
Whiskey
that American
Wednesday.
has been a point of pain as far as some of their debt levels go. Well, also now they're lowering their third quarter outlook. So walk us through what's weighing on the shares.
Yeah, so I think this is an interesting situation. Look, if you look at American Airlines, it's down 8 of the last 9 weeks. But if you look at Delta, United Airlines, UPS, for instance, which are transport companies, they've all been down. So I think there's perhaps a seasonal element to or a component of a seasonal element to why American is down. Like I said, 8 of the 9 weeks as we move into, of course, a season for more travel coming up, and of course, in the fall and Thanksgiving, and of course, Christmas as well. So that's, I think, one of the things. If you
There goes
actually
by.
look at the
Let's complete this
revision
inverse
that
cup.
American provided the
Do
market,
it.
they revised their next quarter guidance down from 85 to 90 cents down to 20 to 30 cents. Now, one of the things to keep in mind is this is not an operational issue. It's also not necessarily a sales issue. It's really a function of the company actually taking a $230 million charge or expense, if you will, because of the labor union contracts. Now, UPS yesterday, if you notice, did the same thing. They actually denoted about a $500 million expense for the quarter, and that's, again, based upon the labor union contract renegotiations which were put in place. So I can see why the stock is down because, again, from the standpoint of earnings per share, last quarter when American Airlines actually provided an update to their business, they raised their guidance from around $3 to $3.75 for the full fiscal year, and they're giving about 50 cents of that back. And I think going back to the earnings, which were back in mid-July, you can actually see the stock's been falling since then. And so I think what we're seeing here is a seasonal issue. I think we're seeing, of course, labor expense issues, but that's been a problem for many transportation and other airlines as well. But I also think fuel. Fuel is the second largest expense behind labor for an airline, and we can see that crude oil is at a 10-month high, and that's manifesting in higher jet fuel prices. So in combination, alongside what you brought up earlier just a moment ago, Jenny, which is the balance sheet of American, because they're the most debted of the large 3 legacy carriers, Delta and United being the other 2. That's why we've seen underperformance of American relative to those other airlines.
A couple things that I also note too. I think these are minor pieces of this story, but they do narrow some other pieces of their guidance. Capacities narrowed from 5 to 7 to positive 6 to 7. Total revenue per available seat mile is narrowed to negative 5.5 to negative 6.5, which is sort of in the lower end of what they suggested before of negative 4.5 and 6.5. But to your point about the fuel impact, we've talked about this for much of the summer. It's been a pretty nice move in crude oil to the upside. It was not necessarily projected or expected by economists. And it seems now that we're seeing some of these companies, maybe we're caught off sides here a little bit in the case of American, as they do specifically cite, as you said, employment costs, but as well as fuel costs weighing on this. And that's why we're seeing this pretty drastic adjustment in earnings per share. Anything else to note here? How is the debt situation been progressing? I feel like the last things that I had read was they were sort of ahead of schedule, or at least on schedule in some of those pay downs.
Yeah, so I mean, I'll address a couple things. One, if you actually consider the capacity increase for American, going back to the load factor that reported around 86.9% last quarter, which was about 6% higher than the previous year, what we're actually seeing is them improving their efficiency. In other words, their load factor, so they're increasing capacity. But by increasing capacity, what that is going to do is present some softening of prices because it's increasing the amount of available supply to the marketplace. And that might be also why the industry group is faltering just a little bit. And lastly, I'll point out the debt. You know, it's about $30 billion on the balance sheet. They're expected to pay down $15 billion of that by 2025. So they're aggressively moving to pay down that debt, which again is favorable for the business. But nonetheless, I think around that $12.50 area, which is that annual low, might be a presentable opportunity considering, again, their load factor is increasing alongside their capacity, which is slowly inching higher, which is a good sign because that keeps prices high.
Yeah, and George, really good point. And of course, we are seeing some selling today, but it's not an American-specific story. We've seen a lot of these names: Southwest,
Correct.
Spirit, Alaska. I mean, just to name a few, face some serious pressure. But great breakdown on all things American Airlines. We'll leave it there. George Tillis, senior markets correspondent here for the network. That also does it for Alex and myself for Next Gen Investing for this Wednesday. Coming up next, we have the watch list with Nicole Petalides.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours.
Yeah, I've seen some people on Discord, I think, that want to buy more, but it seems like only Fidelity from what I've heard so far. Yeah, it's green 1.6%. Is it down 40%? How did you know? I mean, just because you believe in a position or a play doesn't mean you have to continue to add to it. There's a certain amount of capital that should be allocated based on your risk management. And I'm sure you're way over it by now. You have anything in barbecue, but yeah. Try and buy it. Spike you up. Try and buy one share. Unco 9%. Go. Wake my calls up. Push the average into them. Just a really liquid options chain or what? Not like awful. It's fine. Wait, what? Oh, I don't have 10s. I have 15s. Need a big move. Yeah, it's an acquisition only move. I don't think it did 40% today. Look. 28% from the low. Low to high.
Expected to debut tomorrow, not here, but at the NASDAQ. And ahead of that IPO, already got a buy rating from New Street. Set a buy rating with a $59 price target. So just to put that in perspective, it's expected to price at somewhere between $47 and $51 a share, so higher than that. But as we've seen,
coming from the man who has less than a percent of his portfolio in the play, I think.
Quite a bit higher.
Plus, if you have changed your position without updating the Discord,
potentially be trading above 59 tomorrow when it opens. New Street said ARM rides growth in semiconductor content across all end markets.
Oh, Weeble just says it went to 15 cents.
7 years, saying it has a high quality
Then it's
financial
equal to 11.
model, good timing, the fact that the IPO is happening at the low end in the smartphone
Let's see
market,
what E-Trade says.
also an attractive valuation. So at the top end of that $47 to $51 per share range, it would have a market value of around $52 billion. Well, this analyst at New Street thinks by 2026 it will value ARM about
E-Trade
$82
shows
billion. So thinks that that's on the way
15
up.
cents
So,
also.
this is one we're definitely going to be tracking tomorrow.
I don't know.
Obviously, it's not a chip maker, but it designs chips basically for all the smartphones that we have on the market right now. So it's a key player. It's just, I think, the other
oil price
side
action?
of the spectrum would be how much has it already penetrated the market and how much room does it have to grow from here. So this analyst is certainly bullish. We'll have to see what others say once it actually debuts tomorrow.
Yeah, I mean, it's so exciting, particularly with the history that went on, that it was sold. And
Got a little head and
almost
shoulders here, maybe.
almost bought by NVIDIA
5 minute
last
on
year,
SPY. Very
and
choppy.
You do have the chip makers investing.
RSI.
They are investors in ARM,
Yeah,
so,
a little RSI divergence too from this high to this high. So probably move back at least to the bottom of this channel.
And you're right.
Potentially breaking down below that. Be lovely now.
Very modest for the call on that buy rating. Turning our attention
AMC almost
over
back to
airlines,
VWAP.
some of the airlines having to cut guidance for at least one major reason.
Yes, fuel prices, of course, but it's not just fuel prices, actually. We're taking a look. All the airlines are lower today, but American is down 6%. Spirit is off 3.5%. They both lowered their outlook for this year. But if you take a look, United, Delta, JetBlue also quite a bit lower as well, despite not lowering their outlook. So seeing weakness across the board, but yes, due in large part to those fuel prices. But American also blamed higher labor costs following its pay agreement with the pilots. They're getting a 46% paycheck boost.
Holy crap.
And American has to adjust their EPS outlook because
That's insane.
of that.
Airspa comes down some.
Adjust EPS between 20 and 30 cents. That's far below its previous expectations of 85 to 95 cents per share. Now, 23 cents per share of that is for the higher pay, which just really goes to show how much those higher fuel prices are taking a toll on earnings. American expects to pay an average of about $2.90 to $3 a gallon for jet fuel in the third quarter. That's up from $2.55 to $2.65
Let's abandon this liquidity and
a gallon. Now,
dump it.
Capacity is expected to be 6 to 7% higher in the
Make this
third
inverse
quarter than a year
cup.
ago. That's at the high end of the previous outlook. But if you take a look at revenue per available seat mile,
Break the
another
VWAP.
key metric, that's actually expected to fall by 5.5 to 6%.
No more
So that's
bouncing.
at the low end of the previous outlook. Now, Spirit blamed higher fuel prices, but they actually also blamed demand. They said that they've been having to
AMC following the footsteps of barbecue?
discounts for the second half of this quarter
really.
into that pre-Thanksgiving holiday period. So not necessarily a good sign for travel demand. The airline said
I don't know in
it
what
also, of course,
what
cited
context.
higher fuel. So now expects revenue between $1.25 and $1.26 billion for the quarter. That was previously $1.3 to $1.32 billion. Also below where analysts were expecting. They were expecting around $1.32 billion, and now expects Q3 available seat miles to grow 13.4%. That's down from its previously announced rate of 13.7%. So Spirit down about 3.5% today on this news, but American's the big one getting hit, down about 6%.
Yeah, I saw a worst day since July, so we will see. Thank you for all of that. A good update on those airlines. Will you be traveling? How much will you be traveling, folks? Well, you need to know what the demand will be going forward. Caroline Woods, thank you so much. All right, let's take a look at the bigger picture. Adam Phillips is with us, Managing Director of Portfolio Strategy, EP Wealth Advisors. Adam, good afternoon to you. Your thoughts? I mean, we've gotten in the CPI number. It came in a little hotter than expected. We're waiting on PPI retail sales, sentiment as well. Your thoughts on the big picture?
Yeah, hi, Nicole. So I think that a lot has been said about the resilience of the economy and the fact that we've seen some progress on inflation. You know, you look at just the broad economic picture, the Atlanta Fed's measure of GDP now is showing third quarter GDP tracking at about
AMC back to
5.6%.
VWAP.
And so, yeah, the economy is
GME
certainly
almost
hanging
there,
in there. There's
up
still some
3%.
open questions around inflation. Today's inflation,
Barbecue up
I'd say
1% now,
came in
19.20.
just about as expected, but it was certainly, I think it's a reminder that the Fed's job is not done yet. We're quick to remind investors that the economy is not the same thing as the market. And so even though the economy has been resilient, we still have more of a cautious outlook going forward.
So that being
Hi.
said, as we look at this overall, I think about your allocation and how you're
No
going
more
about
chop.
it. I know you're overweight energy, industrials, healthcare. Why those sectors now?
Yeah, sure. So, you know, energy, we've actually been overweight for quite some time, and we maintain a bias towards energy right now. We think it's been, I'd say, one of the more unloved sectors for quite some time now. And at this time in the economy, as we do expect some additional slowing, we're focused on companies and sectors of the economy that can really generate free cash flows. And energy is certainly one that comes to mind and has been, I'd say, been receiving a boost or a tailwind from the recent jump in energy prices. Industrials, we do like, as we expect some more infrastructure spending to help some of these companies going forward. And then healthcare, you know, I think that's really more of a defensive play within those spots of healthcare that are going to receive some attention or demand from a customer base, no matter what the economy is doing.
When you think about the Magnificent Seven, I mean, I just feel like I always have to ask because I think so many people have invested, some have made money on it, some are taking profits, others are saying, hey, I still like some of these names for the long term. What do you tell them?
Yeah, look, we tell them it's okay to like them, but make sure you don't, you maintain a diversified portfolio. We like a few of those names as well. But what I would tell them, what we've been saying is that these companies have run quite a bit. And I think the theme around artificial intelligence, I think it does have legs. And I think there's a lot of interesting stuff going on there that could fuel additional gains. With that being said, I just don't know how transformative the technology will be just yet. I don't think anyone will for quite some time. And so how do you actually determine fair value for these companies? I think, you know, we should be pleased if you're an investor in those companies, be happy with what they've done. But it's not a bad thing to look to deploy to some of those other areas of the market that really haven't enjoyed the same appreciation over the last, call it, 9 to 12 months.
Gold finished today at a loss, a fresh 3-week low, and this comes on the heels of the CPI print, which was the biggest monthly climb in a year. When you think about precious metals or some other areas, sectors in the market, we're going to be higher for longer. At least that's what appears at this point. How do you prepare for that for an investor?
Hi, bouncing back
Absolutely.
up there.
You know, right now, I think we really are trying to, what has been our base case for quite some time now is that rates are likely to stay higher for longer. We're likely to hear the Fed say that next week when they come out of their FOMC meeting on Wednesday. That's likely what the dots plots will show. And I think that really makes it difficult to be an investor in some of those areas of the market that have that were benefiting when yields and rates were much lower. I think specifically some of those sectors of the economy that we maintain an underweight to, like staples and utilities. I think when there is yield that investors can get outside of the equity markets and go to more traditional sources of fixed income, I think that really is going to put some pressure on these areas of the market that have benefited from low yield environment.
And then what about what's going on with the automakers? When you think at, the big three and what they're facing, the strike is less than 48 hours away. I mean, we're getting closer to 24 hours. And so, there's talk that we can handle it for a little while, that is priced in, and then there's talk that this could be recessionary. What are your thoughts on the UAW negotiations and possible strike?
Yeah, it sure looks like a strike is quite a good possibility here. But what I would say is that I don't think this is necessarily going to tip us into a recession. Maybe it's the straw that breaks the camel's back. I don't think it necessarily has a huge impact on the broader economy, certainly the local economy. What I'm watching right now is if we do see some major pay increases from these companies, I don't think the hit is just to profit margins alone. I don't think that's how we should be thinking about it. I think we should be looking at this through the inflation lens. And what does this mean for prices going forward? A strike means less production and fewer supply of cars. So that leads to maybe short-term price pressures within autos. But longer term, these companies, even outside of the autos, you think of UPS more recently, they just announced price hikes a few days ago. And so what this means is that these companies aren't necessarily going to take it all on the chin and absorb all these costs as it hits their bottom line. They're going to look to pass these through. And I think that is just one other thing that is going to make the Fed's job a little bit more difficult in getting inflation back down to 2%.
Yeah. Thanks so much. I mean, I see Stellantis right there at 1897, and that's down 1/3 of 1%. We'll have a lot to talk about as it approaches. Adam Phillips, thank you so much. EP Wealth Advisors. Appreciate it. Coming up next, reasons to consider names like Walt Disney, Meta, Colgate. Yeah, my next guest is here cheering. He's ready because these are the names that he's carefully selected to talk about today. The rationale behind this unusual combination ahead on Schwab Network.
GME almost to VWAP. At VWAP.
The demands are just too much. You know, it could put some of these car businesses out of business. That being said, let's get to some of the names that you like. I know Disney is one.
Spy. Spy wants to bounce here.
Disney's been in the news, and of course, you know, you got to look at Disney.
Cut losses
it's a
now.
world-class property. They've got, you know, 7 of the 10 most frequented theme parks in the world, with the #1, of course, being in Orlando. 8 of the 10 top box office hits are coming from Disney. And then the question is the valuation. I've always loved the stock. I didn't like it at 200. Now where it's in the low 80s, you're at a 9-year low. Based on next year's earnings, it's trading at a nice discount to the S&P 500. I think what people are analyzing here is the deal they cut with Charter. And basically, it's a win-win for both companies. Basically, now Charter's going to be distributing the Disney streaming bundles, and they can put ads on that. They're going to make money there, yet they still retain the right to provide their channels to the Spectrum customers. Right. So, you know, I think that worked out well. You know, the time to buy these stocks, of course, is when everyone hates them. That's a page right out of Warren Buffett's book. You know, be greedy when others are very fearful. You know, and if all else fails, they've got some tricks up their sleeve. They could always break apart. You know, theme parks could go the separate direction. They could name a strong successor to Bob Iger. I love Bob Iger, but he's not, you know, a 40-year-old, right? And so if they name a process there, and finally if they cut a deal,
Spies at VWAP, see if we break it.
Plus work perhaps with something like an Amazon, and basically don't discount a possible purchase of Disney by Apple. So I think you have a lot less on the downside and a potential
purchase of Disney by Apple.
To a premium in the S&P 500, you could see a 20-30% climb in the stock.
There was talk about Apple maybe taking over ESPN. Not Apple taking over all of Disney, but there was also talk about the spin-offs, to your point about breaking up. I mean, that they could spin off ESPN, Hulu, and
the linear
little test below VWAP.
Go to perhaps private equity, which would specialize in declining industries.
Right. So, I mean, you know, it's amazing. Let's see what happens with Disney. You're not wrong. I mean, there's probably a lot of news coming our way. Meta.
You know, I love Meta. You know, the takeaway in Meta is here's a tech company which is on the cutting edge, yet also knows how to turn success into profitability. So they started the year by cutting costs, buying back stock, reducing their expenditures on Meta, and at the same time now they're rotating back into the AI. What I love about Facebook or Meta with AI is they're actually using it to drive more engagement. They're getting 7% more engagement by the advertisers and so forth by using the AI to target things to their subscribers. I mean,
230, Spy still won't do it.
Billions going
Me
out
at
to their
VWAP
website
up 2.4%.
Each month, really, you know, you get your
That one's
Facebook, you
downtrend.
got your Instagram, you've got your Messenger, you got WhatsApp. Those are unique properties. And so I'm a big fan of Zuckerberg. He's there front and center with Elon Musk talking with the Senate. So finally, there's trading at about 19 times next year's earnings, which is about the S&P 500. So you got a much better than average S&P 500 company trading at a market multiple. This was a stock 2 years ago. It was close to 400. Now it's just over 300. There's more money to be made, Nicole.
All right, and then Colgate-Palmolive. Let's see. I wanted to see what the last high was in May. What are your thoughts there?
Yeah, so, you know, Colgate, again, is a great stock if you want to hedge the prospects for the economy. Because, you know, let's face it, it's best known for its toothpaste, other oral care, sun lotion, and so forth. You're going to buy those through thick or thin. But here's a stock that's down 6% this year when the market's up about 17%. But it's a market leader in all of its categories. What I love is it likes to return money to stockholders. It increases dividend for more than 25 years in a row. It's a dividend aristocrat. But, you know, I also like companies who like to buy back their stock. It's a proven way to get more earnings per share. It's on the dividend buyback list for having reduced share count by 5% the last year. Plus, you've got an above average dividend, about 2.6%. The S&P is about 1.5%. Market leader. So there's your hedge in case that economy slows.
All right, good to know and good to have you on doing your homework for us. We really appreciate it. Always love when you're able to be on with us. And while we've been talking in this A block, the Dow has turned negative, folks. We have real estate, energy, industrials, materials now all lower and dragging on markets. David Dietz, PPAC Private Wealth Management. Thank you so much. Thank you. All right, ahead in the show, Wedbush's Dan Ives joining us to talk all things Apple, and let's find out what he thinks. I mean, he raised his price target on Apple. New iPhone he thinks really will get some traction, and how worried is he?
That's the whole range I'm going to get.
All things China Apple coming up.
GME found support on VWAP. GNS down 4.5. BlackBerry's up 4. I liked this one. Overstock's also up 4. EGC down 9%. Up on 230. IP down 3. Jeez. Go SPY, testing it again. See it, SPY. There you go, now SPY's below VWAP. 2 pair. Got there.
For this most recent run-up. That's tied to, again, the fundamentals that we've been talking about, Nicole, the production cuts. We've seen the dollar, which is really kind of ho-hum around this 105 level, struggling to get above it, so not necessarily a headwind for this run-up in crude. We even heard from the IEA, the EIA, OPEC this week. I mean, they were very bullish in many ways in terms of supportive of this run-up in price as far as what we've seen. So, yeah, I mean, again, I'm, in all fairness, very surprised to see that the market hasn't really been focusing more on this. It's kind of, in some ways, discounted what we've seen. And as I mentioned before, more tying into what we were talking about in terms of no expectations of a rate hike next week. And that seems to have appeased the longs, at least to this point. And even when you look at the pushback we're seeing into November, again, sort of kind of balancing out here what we're seeing, I think, in terms of higher crude prices versus expectations for rate hikes.
All right, Ben Lichtenstein, thank you so much. Great to see you, Ben. Appreciate it. As the AI summit continues and just wrapped up in Washington with leaders from the names of Meta, Elon Musk is there. So you have Zuckerberg, Musk, Gates, all in Washington. We want to learn more about AI and the efficiency of AI, and a lot more to discuss here. Welcoming our guest, Razat Gaurav, CEO of Plainview. Thank you so much for being with us. So I do want to get to some of the topics that they talked about in Washington, but first let's focus on Plainview. Tell us a little bit about your company.
Well, firstly, thanks for having me. Good to be here. Plainview, we're an enterprise software company that's focused on transformation. So as companies are changing, they've got to transform, and they have to transform digitally. And so we help companies plan and deliver over $350 billion worth of transformation all around the world. So that's the business we're in. We work across industries, and of course, because we're a system of record for transformation, we're sitting on a lot of data. So AI and the unlock of AI with that data is an incredible opportunity.
Yeah, it is an incredible opportunity and responsibility. And you work with a lot of huge companies, from what I understand, right? Fortune 100 companies like?
We work with a lot of different companies across banking, financial services, insurance, so companies like New York Life, companies like the Royal Bank of Scotland, RBC, and various other companies, but also in manufacturing like Unilever and General Motors and Ford, and also in parts of retail and pharmaceutical, life sciences industries as well.
And, you know, during COVID, during the pandemic, all of this got rushed, didn't it? Because anything that wasn't digital had to become digital pretty quickly. Data, get in the cloud, using AI, I mean, that helps things along. In the meantime, as you help companies plan and move forward with that, let's talk about what's going on the big picture. I would love to get your insight as somebody who really fully understands AI. There's so many great things about AI and efficiency, and I do want to talk about that. But I will say that Elon Musk today and the other guys, the other CEOs, were talking about the concerns they have about civilization. I mean, I'm making it dramatic because it could be dramatic, right? If AI is used improperly.
Yeah, look, I mean, the world is digitalizing, right? And when you digitize, whether it's here in the US or in the remotest corners of India and all over the world, like China, you're going to be producing more data, right? And so people are going to have to do something with that data. So along with all the exciting elements that AI provides in terms of productivity improvements, efficiencies, there are risks that we all have to be aware of that we need to mitigate. And so when it comes to data privacy, when it comes to understanding how these neural networks work and how they're reasoning and how do we still maintain human
climbing
control
up
over
here.
that is something that we're going to have to learn over time.
The VWAP bounce.
We're still in very early stages of that evolution. But I
Nice
think
VWAP bounce for GME.
governments and private enterprise have to come together
Barbecue
to
back to
collaborate
about break
and create
even.
the right governance and the right
Big spread
guardrails
between 19
to provide
cents
the
and
right
17
safeguards
cents.
for organizations and for individuals.
And so as they're making the transformation, I guess there's just so many companies that still need to do this. Right?
All right, Jay.
What would be your advice?
Thanks, man. Appreciate your thumbs up.
Look, I think
Enjoy
the
your
first step
Taco
that we
Wednesday.
recommend to our customers is you've got to get your data right? And data, a lot of people think of data as like
Thanks,
oil,
guys, for your
but it's
likes.
like water, right? There's more data than anyone knows what to do with. but
20
there's
on the
enough
day, not
data
bad.
that you can feed into
240.
decision-making models that AI or humans can decipher, right? So get your data in order. That's the first part. The second part is prioritize, if you're an organization, on what will create value for you through the leverage of the data and these AI models. and where can you have the best impact and the biggest value? And that's very specific to specific industries or specific organizations.
Right.
And then as you go about embarking on that journey, ensure that you have a data policy, a policy document that helps your own employees and your own organization stay
Right.
within the guardrails.
Right, understood. And in the meantime, you have the first generative AI-backed product offering, Copilot, an AI-driven digital assistant. Some of these companies, you mentioned finance,
Yeah.
insurance, auto industry, just to name a few that PlanView works with.
Yeah, this is a really exciting week for us because we just launched PlanView Copilot, where we're leveraging all that data that we have access to across all the transformation work and the digitalization work that organizations are doing, and we're leveraging that curated data to feed into generative AI models. In this case, we're leveraging ChatGPT 4.0, and we're leveraging the Microsoft Azure APIs to access these models. And with the prompts that we've created, we're able to provide a conversational interface to our customers who can extract all kinds of intelligence, insights,
20 minutes to power hour. Look at
predictions,
that.
and automation, not while clicking 35 times, 40 times, but just being able to speak in a simple language.
Right.
And that's a game changer in bringing those insights to the fingertips of the organization and really democratizing the usage of our platform.
And we're hearing more and more about the simplicity.
Yeah.
That it's not 35 strokes of whatever it is from their lips, from the
Yeah.
keystroke. Things are becoming more, as more data is
Right.
compiled, it is becoming easier to then decipher what's next.
That's the power. That's the power
yeah.
of ChatGPT. It was
Right.
the most successful demo the world has ever seen because
Yeah.
of its simplicity. Right.
Yeah.
The marginal knowledge needed to make use of these models is close to zero. But as an organization, you've got to prepare your data. You've got to get the right policies and the right safeguards.
Right.
But the opportunity is so massive, and we're in very early stages.
And so at this point, as you have this simplicity, you're streamlining communication, you're making everything work. I mean, have you been approached yet as a takeover or a partner for some of the big guys? I mean, I can't imagine that you haven't when you work so closely with so many. You're not publicly traded, right?
No,
Are you working to become publicly traded?
We're privately held. We're growing at a
For
very
how
healthy
long?
clip. We'll see when the markets easen up for the public markets. But we do partner with a lot of other large organizations like AWS, like Microsoft, and several other companies around the world, and also with consulting firms like BCG and PwC and Ernst & Young and Accenture, etc. So we have a healthy partner ecosystem, but we're really focused on solving our customers' business problems right now and driving growth based on that basis.
So less so on going public and less so on
Yeah.
being a partner, merger, acquisition, or takeover at this time.
Yeah, for us, going public could be an option, but that'll just be a change in the capital
What,
structure.
could be an option?
Going public could be an option,
see.
but that'll just be part of a change in the capital structure of the business.
Right.
What's more fundamental to us is our product strategy, the problems we're solving for our customers, our go-to-market, and
Yeah.
ensuring that we're creating a lot of value for our customers.
How do you find, or maybe give us a little story, a little color, working with us, other CEOs in the C-suite, some of the conversations?
Fly back down to VWAP.
You could tell us something that you're willing to say publicly.
Yeah, I just came back from a
15 minutes to
summit
power hour.
with about 100 software CEOs from across the country and sometimes around the world, and the whole topic was around AI and generative AI. It was the key basis of the topic. And what's interesting is no matter what problem domain you're in, if you're an enterprise software company, you're dealing with similar issues and similar challenges and opportunities. So I think we're, again, early in that evolution of the leverage of data and AI. And by the way, classic AI models or traditional AI models have been leveraged now for over 35 years. And I've been on that journey for 25 years myself. But what generative AI unlocks for us is that simplicity, to bring that to the fingertips of the common user and really reduce the marginal knowledge down to zero. And that's a huge opportunity.
And where was that summit?
That was on the West Coast in the Bay Area.
All right, good to see you.
Yeah.
Thank you so much for being with us today. Razat Gaurav, CEO of PlanView. All about AI on a day where we just finished getting some news out of Washington, D.C., and the AI leaders, the CEOs of some of our biggest companies there. Thank you so much. Good insight. All right, up next, the UAW strike details, which automakers could be hit hardest.
Okay, SPY below VWAP. Let's see if it does it. You missed the power hour. And back to VWAP chop.
On that. And the day after Apple, of course, also on our list of things to watch. The AI Summit just wrapped up in Washington, and we just had a great AI guest, which you can check out on Twitter. We'll be right back. Some winners and losers for you on the S&P 500.
I thought he had an ace. Finally breaking view up. Yes. from green to red to green on the day. If I can close it out green. Need big green. Little green's okay. Diamonds. Even see diamonds getting there. Calls bluff. Oh, you got a 7. And a full bluff. Should I put them all in? Maybe not. Yeah, that's better. Give him a chance. He's gonna keep going. Got this. 8. Nines. It's on. Pay attention. Not like this. Okay, sold half. I should have just played that. Whoops. Having trouble claiming your account? What do you mean claiming your account? Once you've gotten the app and everything, it should be as simple as clicking on the link and just joining. You might need some verification, like email or something, but I'd love to see this full inverse cup. But I can't be greedy this late in the day. I was red. We've got half to take us to Valhalla. Flush twice. Yes, do it. Do it. 5 minutes to power hour. Waited all day for you dumb candles. Even though I went back and forth multiple times. Alright, I'm selling one there. Got 25% left. Now it's time to be patient again. Impatience with the contracts that are worked in my favor.
Many other automakers that are out there on the marketplace, Tesla or otherwise.
Lost profits in that midday chop again, but
one, how long does it last? And I think it's going to last a very long time.
Not working out.
Does that strike stay within the Detroit 3, or does shutting down what will probably happen is the whole Detroit 3 will have to shut down? Does that then bleed into into the whole supply chain, into the point of tier 2 and tier 3 suppliers?
This
that
is what I
also
was
supply
hoping for back here, but of course it's middle of the day, so it just
to the point
hard
that
bounced off
the
VWAP.
whole auto industry in an extremely bad case
Then
scenario.
it calls somewhere in here, and then puts somewhere in here, and it calls again, and yeah.
Favorite names, just in a millisecond.
Eventually I was like, all right, it's at the high. I
Yeah, our
put,
favorite name's
hold it.
Tesla. Obviously, 100% non-union. This is going to widen their competitive advantage in EVs over the Detroit 3. They already have much lower labor costs, and Detroit 3's
the hell,
labor
another
costs are
contract,
going to go
jeez.
higher. It's just a question of how much higher. If you look at the auto suppliers, the names.
I just really got to wrap it up right there. I'm so sorry. And I am concerned about auto prices and if this could really push them up. David, will this push the prices up?
A little bit. I mean, they're already sky high. Honestly, it's just a giant mess for the chip shortage still.
Yeah. You know what? I'm going to leave it right there. I've already extended the show. Garrett Nelson, David Wisson, thank you. It's great to see you both, and good luck to
File a complaint with Charles Schwab.
negotiations for
It's
all
not
of us
Nicole's fault.
here in the United States of America. I hope this gets settled soon. I'm Nicole Petalides. Thanks for being with me.
Just say United States of America? Do it. Don't blame me. Here's your bounce. Glad I sold one. 2. However many. You still could potentially see we tested them low. So I'll play these guys. Both bluffing on the river, I bet. I don't know, as a military man, better not mess with him. Like a sailor. Big bounce rounds by. One more heart. The same kind of crap they did at VWAP today. VWAP chop crap. Get that. Freaking bounce. Wow. Wow. Yeah, same sort of algo that was doing this stuff earlier. I'll probably just chop in this range. Public to exit all of it near this low. Might not wait for any new lows. Yeah, that low was, that's right, that was this morning. Today's been so slow. I didn't take the short, but we did take the long at the low of pre-market. It was a nice long actually. Then it gave back all those gains. Here, got it back here. This is why I brought poker into the stream. I wouldn't trade during this. Sometimes you get moves in the middle of the day. And we did. We got that moved down to VWAP, but it was just a much bigger range of chop than I was anticipating. So like you'll get the chop, but it'll be, yeah, just bigger range of chop basically. Ooh. This one. Does that put him all in? Yeah, it does. Eight. Pair of eights. I think I got the short end of the stick on that. Yes, Jack 7, do it. What? Oh, because there's 2 4s. And 4s. I see, I see. Well, if we ended at green, this will have been a green week. There's no reason we shouldn't at this point. Hi, card. Wink. Come on. Bluff me. Please, mister, please. Not that bluff. Nothing. He's watching the stream. It's one of you guys, isn't it? Cheaters. Here. He just likes to see cards, I think. On my 10s. I gotta check that off. 3 queen, what this for? He just loves to see cards, this guy. Calls anything. Yep, calls anything. Comes the spy. Do 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 do. Okay, There's a retest of that low. Still early. It's only 5 minutes into power hour. Does he calls anything? Right the way to play. Leave it to the odds. Alright, I'm gonna sell that here. I'm out. Another day. Wee. Happy with that. I was red for a bit there, which was no fun. For such a choppy day. Had this call, which is nice. Had a put here actually, which was nice. I just didn't take enough profits. With how crazy that move was, I just assumed we were reversing. So, taking more off. And then I could have held just a few contracts through all this. Maybe cut them out. But that made my position from green to red because I only cut like 20% instead of like 50 or 60%. Well, yeah, worked out anyways. And then the one crazy thing, so I almost started getting whipsawed up here. It was really close. I had puts, kept climbing up. I'm like, oh my gosh. And then we had this candle. I literally closed my puts up here. You don't usually want to close your puts at the high. But I thought we were breaking out, and I was sick of these things just melting on me. And I actually considered, did I open up calls? Yeah, I think I might have even flipped to calls. And then it just wicked from all the way back down. And then sometime in this candle, I went back to puts. I'm like, all right, my puts were right. You need to chill. Not breaking out. It's at the high. Looks like a double top. So thankfully I didn't get whipsawed there, and it started rallying back up. At that point I probably just cut my puts, but yeah, it was hard getting back into puts, of course, after having puts, getting calls, both of them losing. But yeah, it was the right move. And then those I ran down. I didn't add to them. I think that was my last play. It's like I'm not gonna do any more. So ran those down to here and sold them. And yeah, I closed some at VWAP maybe. Yeah, I scaled out at VWAP. So sick of the VWAP chop bounce. FI up 33%.
CPI here. VIX, by the way, trading at 13 handle despite the Russell pulling back here. I mean, there is kind of an odd situation, I think, for vol right now that suggests a complacency that I'm not sure the inflation data warrant, because this is not data that support cuts by any means. It may not mean hikes, but it certainly doesn't mean cuts. Does higher for longer, but maybe not higher than where we are? Is that a VIX 13 type of outlook?
I think what this does, Oliver, is, we covered Meta today. Here's a case in point, a singular case. We covered Meta today on Fast Market. Meta trades at a 35 PE, right? It got really cheap in some of that big sell-off that happened when Mark Zuckerberg was spending a lot of money before he got into his year of efficiency. Now, Meta's PE has never been higher since 2019. So you're looking at a bunch of stocks whose valuations, whose PE ratios, Apple's in there as well, trading at about a 29. Just very little reasons to see extreme value in some of these names, Oliver. So Meta at a 35, Apple at a PE, is that where you want to be adding it to your portfolio? Probably not, when Apple has spent a lot of time below 20 PE and Meta was just a 12 or 13 PE. It's hard to add it now at a 35.
Yeah,
so
fair.
a lot of these names are just expensive. Valuations matter, and the valuation now of the S&P doesn't give you a lot of reason to take these stocks much higher, Oliver.
Yeah, well argued, I think there. I think that's basically what we're seeing with Apple. There's one exception, possibly, to that, which is Amazon. Let's talk about it, Renita. I mean, kind of coming out of nowhere here. This steady grind, no breakage in the trend, put in a 52-week high. Nothing seems like revolutionary coming from them, just more of a domination of the logistics and the supply chain.
Also, I think Amazon has got a really good hold on the news cycle right now. We know that it's a heightened environment for higher wages among service workers, among delivery folks, among people in Hollywood.
That's right.
And this morning when we reported about Amazon raising the wage of its delivery service drivers, the third-party people who deliver your packages from the blue vans all the way to your doorstep, that was received pretty well in this environment, right? One thing that we didn't talk about, though, this morning was the fact that this program has enabled Amazon to be less reliant on FedEx, on USPS, and on UPS, right? And that's how we get to this huge supply chain that Amazon is really trying to take control over, you know, because the next thing, Amazon is expanding into physical retail. Their service is now going to let its 2 million merchants deliver inventory directly to physical retail stores and warehouses, and not just Amazon's own, but those outside of the Amazon network. So for different types of logistics providers and even different online marketplaces. And it's really wild because that story from Bloomberg broke down how Amazon is trying to get into your freight, ocean freight. They want to be able to provide customs. They want to be able to do ground transport, of course, and dominate it. They want to occupy the entire supply chain with one seamless service.
The market, I think, maybe has kind of forgotten somewhat about how important that is to the business, given all the focus on cloud and kind of the high growth tech stuff that, of course, drove the bottom line for them. The fact that the stock is now moving again on some of the retail efforts that they're making outside of their online business and, you know, outside of the cloud stuff, I think is really interesting because it reminds us that this is ultimately is kind of a, I don't know if it's not a staple because it doesn't trade like stable valuation, but it has more and more similarities to essential business service and essential consumer functions, kind of almost like a Walmart, you know, where some of these retailers have done quite well. And you know, if you're an investor looking over the past year, you would probably be just as happy in a Walmart as you would kind of a pure cloud growth trade. So I do think the story kind of reminds us that Amazon maybe doesn't belong in some of the high-risk tech camp that is now under a little bit of scrutiny following the big rally that they had. Amazon feels like it's hitting its stride on the chart right now.
Oh, absolutely. And so to your point, the delivery service program has generated more than $45 billion in revenue over the past 5 years. And if Amazon is able to expand into ocean freight, into customs and everything else that you see, air, water, land, everything else, then it would be much larger.
Yeah, all right. It's a pretty interesting story, especially the fact that the market liked their wage hike for the delivery folks because other places in the market have not been as forgiving for companies that are having to deal with wages. But I guess if you do it off your own volition and not after a giant, you know, conflict with your workers, then you get the, you know, a better deal from the market.
Low there on SPY.
Shares up 2% right now.
Got 44508 low of the day.
Up about 13.5%.
AMC bouncing off VWAP a bit.
Story. Thanks, Kev, for the thoughts here on the macro. Let's continue that discussion with Danny Kirsch, head of options at Piper Sandler. Even though it's an inflation day, it seems like most of the stuff you're focused on right now, Danny, is more about the consumer and perhaps the risks to of a slowdown in the consumer rather than some like big reflation trade. Is that fair?
Yeah, that's absolutely the case. And you guys talked a little bit about oil and that being part of this inflation print, and that seeped its way into a lot of parts of this number, right? You had airline airfares that started to climb. Used car prices actually didn't come off as much as expected, and this all ties into this squeeze we're starting to see on the consumer. And you heard comments in the last earnings. Like if you looked last quarter, consumer discretionary stocks sold off on average roughly 100%, 1.25% after reporting. Consumer staples around the same, and they're telling you things are getting weaker. There were comments by Kroger, Macy's, Dick's, a Burlington Coat Factory. There's no shortage. I mean, there was probably 40 different retail companies that specifically mention the consumer. They're seeing some weakness, and this is with unemployment super low, right? Unemployment's basically at all-time lows, and they're already seeing cracks in the consumer. So like that is like the one thing that really gives me pause. Unemployment most likely will be going up as this lagged impacts of higher rates sort of takes hold, as you were just talking about, higher wages sort of crimp profits. And how do you fix lower margins? You start cutting employees, and as you cut employees, there's less discretionary income. And to me, this is all going on with oil prices now back near their highs. I think oil is now $90 a barrel. You're seeing it reflected in gas prices, which seasonally typically come down now or going back up. Banks' willingness to lend coming off a cliff, falling off a cliff. Credit card interest rates, all-time high. Excess savings, gone. Like, there are all these different sort of negative catalysts. And let's not forget, like, the biggest one, student loans. The repayment is picking all the way back up. And this is all happening all at the same time as people, wages perhaps aren't really keeping up with inflation. There was a huge boom
it's a good thing I was in that.
During
Probably would
COVID.
have gotten
A lot
baited.
of things have already been purchased. And so where's the first thing you cut back on? Is these discretionary purchases. So for us, with volatility, you talked about the VIX at sub 14, with volatility this low, we're trying to find areas we think could underperform the downside. And XRT, the retail ETF, that to me is like the most logical place to look. That has so many negative things working for it. And then this all coming with implied volatility basically at pre-COVID levels.
Now, there's the chart XRT, which has been pulling back here over the last month after a decent spring, early summer bounce. Wanted to put some visuals behind your case here. Personal savings, which have dramatically decreased, of course, from the COVID boom. Not quite full circle, but if we follow that blue dot line, I mean, it looks like we're kind of getting there. It's
we
not hard to figure out.
we think within a month, excess savings. So that number is 0.27 trillion. So it's 270 billion left of excess savings. It was north of 2 trillion. That's the y-axis. We think it'll be zero by next month, maybe November, and then you're starting to so that money's been spent, that money's gone, and that's been a big boost to these stocks. It's great. I mean, this is when people say, is the Fed doing enough? Is like this is what the Fed is doing. They're getting all, and this is what inflation does as well, right? All these like selling less units at higher prices. This is like this is the end game, right? Is all this extra money being sucked out, and it's finally happening. We're finally here, and these stocks are already reflecting it, right? They've come off from their highs, and we think there's more downside to come. It wasn't that long ago, before COVID, when retail was dead. Well, we certainly don't think retail's dead. The U.S. consumer is hard to bet against, but we do think there's downside from here. And you're talking about Amazon's able to raise wages. Like, that's who's going to win. Walmart's going to win, but it's XRT is an equal weighted ETF. I think there's 100 different retail stocks. Amazon's in it, but it's a small percentage. Like, I went short in XLY. XLY is Tesla and Amazon. That's not the short. The short is, we think XRT. We think these names like the Macy's, the Dick's, they're already telling you they're starting to struggle, and this is before unemployment goes up. It's like, and again, this is all coming with XRT 3-month implied volatility, 3-year lows. Like, puts are just not expensive, and we think there could be more downside. I was on here like last year, and we talked about KRE. This seems to be like a very similar setup.
And also the timing-wise, because, wow, time moves fast. It's pretty wild that you were putting that KRE short on our radar in the fourth quarter last year before the first quarter blow up this year. So I'm kind of going full circle here on the calendar. just don't look at on shoes or Lulu, Danny, because people haven't pulled back there yet. They're still blowing $200 a pop for leggings and shoes. Hey, another one real quick on inventories, because I did hear a compelling argument from Neil Dutta earlier this week at RenMac, and he was saying that coming into this year, there was such a deep fear about recession, widespread. Everybody was basically convinced we were rolling over a cliff right around when those regional banks were getting hit, that a lot of these companies and retail businesses too slashed prices. We know that happened. There were a lot of discounts. They cleared out inventory. And now, broadly speaking, he was arguing there could be an inventory rebuild happening. Seems like you would argue the opposite.
Yeah, our consumer team, I think, has done a great job highlighting that isn't the case. They've already restocked, and they're still above trend in terms of inventories, and they're still working through this inventories. And that's why you're seeing on these earnings calls, they're saying margin compression and clearance sales. We just don't see that. We still see inventories way above trend, and this dream of restocking isn't going to happen. And we'd expect, again, this all ties in with this sort of disappointing year end. And one other reason we think XRT could underperform, keep this in mind. This has been a pretty strong year for the market, right? Qs are up 25, 30%, S&P's up 10% plus. The biggest losers are regional banks, which have underperformed this year, and a lot of these retail names. And my expectation is, and you see this every year, there will be tax loss selling into year end as people try to harvest these losses against some of the gains they had to avoid paying a ton of capital gains taxes. So again, there's just so many things working against this space, we think, into year end. And the inventory rebuild is not going to save it.
Okay. So it sounds like the short XRT trade is the way to do it.
December puts.
December
King,
puts.
queen.
All right. Thanks, Danny. Never.
Yay, December put. Oh, yeah, you got straight
here.
December puts.
Appreciate the
That's enough time for my
always.
Jan puts.
And I was around this
Thanks for
time
having me. Appreciate it.
Yeah, you nailed the KRE trade, so maybe give him a listen. Danny Kirsch, head of options at Piper Sandler.
Oh, that's the
All right,
banking
good macro discussion.
ETF.
Let's dive into a tech business, the services side.
I like it. I like the head and shoulders.
IBM 2 years ago.
Cross below the
Kyndryl,
50 moving
ticker
average.
KD, is in the comeback
Bounced off the
mode right
180.
now. Year to date, up
Expected it.
38%, more so over the past year. We've got the Chief Financial Officer joining us to talk about the liftoff since earnings a month ago. Be right back.
So we want bounce on AMC, Funko, up 9, holding it down for the Funko gang. Dish up 1.14. This thing, dude. Look at this. This is crazy. Eventually, these options are gonna lose value just from it trading so flat. Base down 7 today. Looking to see if it bounce on that support. Today's not looking like it. Buy climbing up a little bit here.
So really transitioning the business to be both focused on profitability and a return to revenue growth.
You list basically all the biggest companies as strategic partners. When you make that transition to top line growth, are there specific business lines that are contributing the most to that? So what's pulling versus dragging? This past quarter, for perspective, your guys year over year was negative 2%. So you're pretty close there just in the last quarter.
Yeah, we see a lot of the trends going on in technology and technology services as being ones that we are going to participate in and benefit from. Cloud migration is an important part of that, and cloud-related services is definitely a driver. We're partnered with all three of the major hyperscalers, in Amazon and Google and Microsoft, and we see that as a growth opportunity for us.
Your dish calls are down 80%. Got them a week ago.
Cyber resiliency is a key area for us.
Oh yeah, yeah, they expire on Friday.
Where we're
Yeah, you just paid the Theta Farm for sure.
Customers of ours very focused on this issue. And then AI is over time going to be a growth opportunity for us. It's already a significant cost savings opportunity for us. And as our customers look at AI and AI solutions, we see data architecture as being an opportunity for us going forward, as well as data availability and cybersecurity around data for AI.
Very cool, especially as we hear a lot about the
I'm calling
cloud
that.
migration.
Wish
and
one of these people would fold.
Like, for example, an Oracle that's integrating a Cerner. You know, there's a lot of examples like that where we would expect to see some more kind of cloud partnerships and M&A happen.
I got a tournament mode.
Be a sort of lubricant for companies that find
people just
overlap in their products.
call everything
After
you
last
can't.
year, a lot of these cloud stocks
Non-tournament.
got beaten up. A lot of them still are unprofitable, and it seems
Raising
like it would
pre-flop
make
is
sense
tough.
for M&A to happen.
I think
Is
it
that
doesn't
a
work.
business opportunity for
Only
you?
slow playing works.
I think cloud absolutely is going to be a business opportunity. I don't feel that we need an acquisition
AMC coming up some.
to drive that. We have a lot of intrinsic or organic opportunities, particularly since a lot of our customers are large enterprises with hybrid environments. And so there may be legacy technologies that are still, in many cases, very important to them. At the same time, that systems of engagement are moving to the cloud. And so we spend a lot of time talking to customers about the what we call the right workload on the right platform. And that often is cloud for parts of what they're doing, which involves cloud migration, but how that connects to legacy systems and legacy data architecture and so forth is all, all very much part of where we bring a lot of value to the table.
I saw in the past quarter CapEx of about $100 million. Can you give us an idea kind of what you expect to spend as part of these efforts?
I want to play this differently.
Can you find that growth
Well,
by just lopping off the slow, sluggish stuff?
three ways to
or
go
will
all
you
in.
need to make investments, make hires,
That
or
is
invest CapEx in a way that's going to show up on the bottom line?
Yeah,
3.8.
we'll continue to invest in CapEx. Over the
Yeah,
course of
just
this year, we'll
throwing it
probably
away.
invest close to $750 million in various capital expenditures. But a lot of our growth is really driven by the alliances that you referred to. And I think it's
Happy with
really
my
important to remember
sell on
our
SPY now.
starting point. We came out of IBM and we're spun out from them. Prior to that, we were
Very
an
good TTM.
IBM captive and not fully
Let's keep crossing
participating
cone.
in the broad ecosystem, the broad technology ecosystem
All right,
that we
macaron.
participate in now. And as a result, we feel we have almost like catch-up opportunities with our customers to play a bigger role in their infrastructures, play a bigger role in their technology stacks. And that opportunity, combined
Right.
with the alliances we have with leading providers of technology, really gives us an opportunity to grow, in large part with our existing customers and without necessarily a lot of capital expenditures, but really taking over responsibility for more and more of their infrastructure work, more and more of the plumbing, more and more of the hearts and lungs associated with how their businesses run.
Sounds like you'll be able to, sounds like part of the goal is squeezing a little bit more juice from the existing clients and doing it at a lower cost
Pretty big bounce here on the SPY.
opportunity. So
It's almost
compelling
even going
case,
for
and
VWAP.
Appreciate the outline
Big,
here. David,
large.
be in touch. Thanks a lot for joining us.
Thank you very much. Take care, Oliver.
Absolutely. David Weischner, Chief Financial Officer at Kyndryl. Shares down today, but still hanging out at 52-week highs following the pop post earnings. We'll be keeping a closer eye on it going forward. Coming up, let's trade some options. We've got a bullish trade in tech for advanced micro, but we'll expand the convo out to include American Airlines having a rough day and Ford having a good one.
I like it, but I wish there weren't hearts. Royal flush coming in. Cool. Well, no more hearts, please. Jeez. Hey, full house. That's neat. I win the money. The money is mine. I win the money. Cash is hard, I forgot.
might get hurt here, or will get hurt. Is it for sure? I mean, they
Yeah,
they hit it.
Q3 estimates for EPS came out. Consensus was 65 cents a share. They lowered it, the adjusted EPS down to 20 to 30 cents per share.
Okay.
So more than cutting it in half at this point. The average price for a gallon of jet fuel, $2.90 to $3 per gallon. Now that was in the $2.50 range prior to this. So cost going up.
And also on the labor side, too, they talked about pilots.
Pilots, they gave 15,000 of their pilots a huge raise. Now they've got some of the flight attendants are thinking about going on strike also. Everybody wants those big, massive raises because demand is still there for American. And last quarter, really good EPS, really decent guidance. But now you're starting to see those higher oil prices and energy prices and labor costs really start to affect us. Now, the stock was, 52-week highs, above $19 a share in July. A lot of the airlines topped out during that period as demand and prices for tickets were at their highest level that we saw post-pandemic. So that was, the boom time for them. Now the airline's coming back down a little bit, and then not only American lowering their estimates for Q3, and they'll probably have to lower for their fiscal year. Spirit Airlines came out with the same. Delta came out with this about a week and a half ago due to these rising fuel prices. But somebody probably trying to take advantage of this pullback and giving themselves some duration because the unusual option activity I saw was out in the January cycle. So you've got 128 days till expiration on this, Oliver. Trader bought 12,000 of the 14 strike calls in here. Average debit just over $1 on those. So that takes that break even to 15.02 to the upside in here. Over the next 128 days. That's about 13% above the current share price in there with call volume. Even on this slide today, still 3 times the daily average volume. So
because they're just going to hike
bottom feeders here in this
Oh
one.
my
They're
gosh.
just going to hike our prices, right?
Yeah.
I mean,
demand is still
isn't that
there.
the way it goes?
They did say that capacity also increased. So what does that do when oil prices or jet fuel prices go up? Capacity's increasing. The price of tickets have come down from that top that we saw in June and July. But that margin shrinkage a little bit. So maybe that's a concern. But we're at 5-month lows today, and I think this trader's trying to pick a bottom, near-term bottom in this one, but giving themselves some duration.
It's a tough one to figure out, frankly. There's so many. This has been, I mean, look, it's kind of a notoriously hard trade.
Yeah.
Airlines, and boy, has that really come true this year. Up, down. American now only 4.5%. At one point, just going into last earnings, a month and a half ago, I think it was up 50% on the year.
Yeah,
it's just totally take a nosedive.
And you take that rhetoric from January through June, and the rhetoric from the CEOs of every airline was, hey, demand's outstripping supply. We're not increasing capacity like we normally or historically have done.
They weren't able to capitalize on it, basically.
Yeah.
And so the market liked some of their margin numbers because they were able to kind of gouge us for price.
Yeah.
Yeah,
now,
absolutely
for the
nothing.
consumer, if they get a better supply of pilots, flight attendants, and actual planes too, then maybe they can recoup some of the energy losses and labor losses by pumping up the volume and scale versus jacking up our prices.
Nobody folds.
We won't know until we get through the holiday season.
Yeah, that stock's fallen 30% from those July highs. So, yeah.
Well, United and Delta are still up 23%, so it definitely has been a stock picker's market within airlines, and odds are, if you pick the stock, well, I guess it's not a stock picker's market because you had higher odds of missing it. If you tried to pick the stock here, and there's, 6 of them, only 2 of them are really rewarding over the past year, you would have been better off just trading the Jets ETF and eke out a small gain of like 6%.
Right.
Well, your last trade is in Ford. Give me that real fast. Shares.
UBS came out, reassessed or reassigned the stock. It was a sell. They have put a buy on it with a $15 price target. But, helping the stock a little bit.
What kind of tacos? What do you have in them?
% on the year, but you've got the strikes looming. Midnight
hating
tomorrow,
cash games,
Oliver, we're
or
going to get
just
some more
people I'm playing
clarity
with.
on what the UAW does here with the strikes. And I think somebody's setting up for some bad news in the short term. I saw some short-term positioning in here in the September 22nd weekly cycle that expires in just 9 days. Trader was buying over 12,000 of the 12.5 strike puts in there. paid in only a debit of about 20 cents and really inexpensive or cheap option premium out there. Break even at 12.30 over the next 9 days. That's 3% below the current share price in there. They did sell out of some of their long September 12 puts to kind of up the strike on here, but still short-term positioning expectations probably for a strike and maybe some.
Oh,
of these
half off on
automakers
Wednesday.
can
Nice.
Okay.
Is there from Tuesday?
Interesting move today, up 2%. Really kind of a buoyancy to the autos that I didn't really see coming until
6 tacos
that
for
was
10 bucks.
resolved with
What are you
GM.
getting them? Air?
That said, GM did fade. It was up earlier. Now GM's only up 0.5%. So that does kind of make sense to me. All right, thanks, Tom. Interesting trades. Good stuff today. Coming back, we're going to talk about the sell-off in Netflix. We're going to trade some commodities and look at the relationship between crude and the dollar. Netflix CFO has some commentary the market's not a big fan of. as they pursue their
broke out there,
gaming interests.
33%.
Netflix shares are down 5% right now.
Bye. There you go. You can just say pork. Sound delicious. They bluff it off. Calls everything, dude. Ah, trying to go all in. Get out of this stupid table. Aces landed. You had a pair of 9s. There we go. Oh, there's pineapple in them? That's pretty good. That's a pretty good deal. How much are those tacos on Tuesday? Like twice that price? Oh. I don't know how these guys play. I'm the one that raised pre-flop now. Act like I didn't get it. Oh, now I enter slope table. Good hand, slope table. Holy crap. Spades got there. Got a call with spades. Look at this table. This is the opposite of the other one. I go all in. Someone could have spades. I'll fold anyways, big babies. Oh, they like all ins. They call those. Shut up, you don't have it. See? You didn't have a king. What's with the min raise? This guy. Trying to bluff me with min raises? Oh, he actually kind of bluffed. Ew. 2 pair. Not a great hand, whatever. Let's see, 10. If we're almost at 10 minutes, Fugazi. Look at that.
Story, no
We
doubt.
got a
So
little
40% this year.
Power
So
Hour
still
Gen I.
has had a really solid year, but then you zoom out and you see where shares once were. It has been more of a clawing its way back from some pretty brutal post-earnings moves last year. So we're down off of the highs by about 15%. We're down about 7% now just this week, including today's downside. But also still up off lows by 95%. But again, I just think when you look at Netflix, you have to zoom out because that tells more of the recovery
Show
story.
my bluff. Get these guys to loosen up a little bit.
Outsized strength this year because, as we know,
Play
it's
a little
just
more.
clawing back some of its losses.
Absolutely. You know, it's basically stuck right in the middle between the highs and the lows. So the fact that the market now is reacting pretty negatively to like nothing really alarming here. I'm adding it to my list of recent winners that are proving to have a very low bar for disappointment. Whether it's Oracle, Apple, now Netflix. List is kind of adding up
Straight
here.
or the flush. Let's see it.
10-month winners that suddenly are just getting dumped with like any news that's you know not terrible.
But okay, but as we know from Netflix, though, it wouldn't
This
be
guy with the
totally
min,
unprecedented to then see a
the min bet
5.5%
flushes.
move to the upside.
He
I
just
feel
got scared that time.
It's a give and the take. And I don't know how, but just this weekend, I noticed I was finally kicked off my dad's Netflix, so I did finally sign up for Netflix. I've been able to skate by all this time, though. I was like, whose Netflix was I using? And now I finally signed up, and I'm one of the millions of users that was kicked off their free account.
All right. That's the difference between you and me. You're on your dad's Netflix. My dad was on my Netflix.
It's not really at 20 cents though.
That is the difference between you and
We'll
I.
try and buy 10,000 shares.
Jenny, appreciate it. All right, get your own Netflix, Jenny. You're the host of a TV show. Jeez. All right, let's bring in our Schwab team next. We're going to take a short break, come back for big picture discussion into the Bell of Jeff Kleintop and Colin Martin. Stocks are evenly divided right now.
Just check this. I already called my bluff before. See what I'm capable of. Look at these guys. I woke them up. See that? Oh, I thought he called. Maybe woke that guy up. I guess I can call all these that don't raise pre-flop. No reason to fold. I'm not saying it's not displaying that price. I'm just saying if you actually want to get... Should have called. Oh, I guess he went all in. Never mind. If you actually want to get filled, you have to put it higher. That's just showing the last transaction. That doesn't necessarily mean that's the price that someone will sell it to you for. Or that you could sell it for. You know what I mean? That's the spread. What you're seeing is just last transaction. That price. As it gets more illiquid, the spread will increase. Turbo trader? What the heck? I don't even have the spread on here. I don't know why. But, just a couple days ago, like a week ago when I bought it on OTC, whatever that was. Even then, the spread, I was having to put my order above the whole spread. And I can only imagine now, with it being less liquid. Why it's gapping around. Is this the min-raise guy again? I think he's bluffing with it. Ten minutes of Fugazi. Oh, very muted. Alright, no, I'm last to go. Oh, I meant to go 50, not 20. Whatever, we'll get everyone to play. This dude calls anything at best 6 with the 8 for a kicker. Alright. Good to know. Just keep barreling here until I get a good hand. Oh, he folds for him, huh? Finger slap. Some bluffing going on here. All right, last hand. We get everybody all in. I make it all the way back close to VWAP. Wow. Come on, let's keep going. There you go, all in. There's one. Got clubs, maybe. Ace 7 of spades, nice. Told you I was gonna get you, buddy. Cash games. Win big, take their money, bail. Alright, let's buy back to VWAP, that's crazy. AMC up 8 1/4. Got GME actually pumping up there. Close to the high of the days, 3.7%. There's SPY to VWAP. We have PPI, initial jobless claims tomorrow. Retail sales, that's all pre-market. Whoa, big pump through VWAP. Wow. 5-minute finger slap. Got to be careful. Barbecue up 2%. Bounce from 15 cents to 18.40, so not a bad bounce. The price ranges are going to get bigger and bigger as it gets more liquid. You know, some OTC stocks will move thousands of percent in one transaction. No one wants to buy and no one wants to sell until it's thousands of percent higher. You get that huge move. Yeah. See, good. SLE. Or BFS. Am I still in this? Probably. Buy is up 31%. Funko's up 9%, 10%. The 10% owner of the company, 10% shareholder. I don't know if he's on the board or anything, but he bought almost $1 million worth. So that's the news on Funko rallying. BuzzFeed's up, Overstock's up 5 1/4. AP's down 4. I didn't do any trades today, just the spy stuff. So another green day, 8.5% on the small account. Yesterday was like 20%, given the account has come down a lot. See, last week was not a good week. This week so far has been nice. Starting hopefully to connect with strategy. Let's see. Holding plays a little longer. Doing my best not to overtrade. Can work on both those more though. Yeah. So that's what I got. Thanks guys for watching. Thanks for your support today. At the bell in 30 seconds. How many likes do we get? We do. How do we do? 21? 21? Pretty slow. No problem. No problem. Thanks, Psych You Up. Thanks, Tasty. Thanks, Christopher. Thanks, Jay. Good guys. Have a good afternoon. Whoa, look at that candle right back down. Candle all over the place. Wow. Pump it up. Get some more likes. Thanks, Tasty. Appreciate it, man. Late, but not a problem. GME Moon, yeah, GME 3.5%. Not bad. I still want to see it break this line. Set up a little inverse shoulder over here. We have an inverse head. We have an inverse shoulder. Need that other shoulder on a breakout. Otherwise, I think we're probably going to retest this low at least. Maybe lower lows. Thanks, guys. Thanks for the support. We'll see you on Discord. Good afternoon.